as inventory is so low and as affordability is just getting even worse.
I mean, I guess the affordability is the issue, because, I mean, I'm looking here, you've got some interesting notes here. You know, over the past 5 decades, the average rate on a 30-year fixed-rate mortgage is 7.75%, which is above where we are today. But you point out here the difference is home prices are so much higher that, boy, the financing costs are just brutal. And the affordability is just almost ridiculous for a lot of people.
Right. You mentioned earlier about, back in the early 1980s when mortgage rates were at 16, 17, 18%, people still bought homes, right? Prices actually continued to rise. What's been different over the last decade or so is that home prices have increased so much faster than incomes that when you combine that with these fast rising mortgage rates, you really do get an affordability crunch that we haven't seen in history.
So what's going to happen to affordability, I guess, can't come I guess down or up. Houses can't get more affordable as long as rates stay at these levels, right? Because the problem is not that that buyers aren't able to stretch to the price with the rate, but that homeowners aren't selling. There's no stock.
Yeah, I think the inventory is really the major constraint on the market. Look, for some people, they can't make a 7.75 or 8% mortgage work in today's market. And so we're actually seeing people who are finding renting being a better option right now as more rental stock has been coming online. But the way for affordability to improve, the way for home price growth to start to track better with income growth is really to increase the supply of housing, both through new construction, as well as for the environment to change for existing homeowners to be incentivized to list their home for sale. And as you mentioned, as rates stay high and people feel locked into a very low mortgage rate, it's going to take some time for that new inventory to come onto the market.
You know, Lisa, Matt and I have spoken to, all kinds of folks throughout this supply chain of real estate and development. And they're telling us they're building as fast as they can. And there's a lot under construction, whether it's single home homes or multi-home type of units. And maybe relatively soon, we're going to have meet supply and demand and maybe even be oversupplied with housing. What's the take from where you sit?
Yeah, that's really interesting. So we have seen, for example, on the multifamily side, the biggest delivery of new apartments that we've had in decades. But we're also seeing, when you look at building permit data, that the number of permits issued to begin construction on new apartments has dropped off precipitously. So we sort of can see the new construction on the multifamily side working its way through. And as you point out, as new construction has come online on the multifamily side, rents have started to come down as supply has started to equal demand. I don't think we're going to see that on the single family side, though. We have been in a structural deficit in terms of the number of single family homes needed to meet demand. Could be 1 million we're in a deficit. It could be 3.5 million, could be 5 million, depending on who you're talking to. And so we're still a long way from catching up and closing that gap. And home builders are really facing the crunch of higher interest rates as well. It gets harder and harder to build new housing as their borrowing costs go up. So I think this low inventory affordability challenge is going to be with us at least into next year.
What's the cost? I mean, it feels like there's a real regionality to this, that, during the pandemic, one of the fallouts is everybody left New York, everybody left the big cities. They're all going down to Florida, Texas, Nashville, all that kind of stuff. Is that what you see in the data?
Well, that's really interesting. Yeah, so we did hear about that. We heard about a lot of people moving from higher cost urban areas to less expensive areas of the country. I think the big story, right, was about people flocking out of California to Idaho. In fact, Boise was one of the places where home prices increased the fastest. It's going to be interesting to see. Now, that was part of the trend that was going on really before the pandemic. The southeast part of the country, the southwest, those were fast-growing places even before COVID. I think it's going to be interesting to watch to see what companies and businesses are doing and the extent to which people are going to be called back into the office, where working remotely is going to be less possible for some people. And we are already seeing populations of cities, New York, DC, Los Angeles. We are starting to see the population begin to grow again, and people are returning to the city, maybe this time for amenity reasons as opposed to for being close to their jobs. But certainly the urban areas, even the high-cost urban areas, are not dead, are not dying.
All right, so that's good news.
That's good news for those of us who live
and so, I keep hearing John Farrell on Surveillance asking the question, are we going to see a generation of Americans who aren't able to become homeowners?
Right.
And I feel a little bit better, Lisa, when you say this could last a year or even 2 years. That's not as bad as a whole generation, right?
Right.
Do you worry about that as well?
I do in some ways, because it's not just about COVID. So if you take this millennial population that's in the prime first-time homebuying age right now, think about where they were during the 2008 financial crisis. They came out of college into the worst recession in 75 years. Really took a long time to get jobs and careers started. And then, oh, by the way, when they reach the age when they're trying to get married and have children, they get hit by a global pandemic. And so they put off things related to marriage and children. And so it has been a double whammy for this generation who has delayed homeownership. The average age of a first-time buyer is now 36. It used to be in your late 20s. And so for this generation, the delayed access to homeownership is going to put them behind in terms of wealth creation relative to other generations.
We've got to see, I would guess, a massive explosion of adjustable rate mortgages, right?
Yeah, we're seeing a lot more adjustable rate mortgages. We're seeing people who are, but the gap is not as much maybe as people might have expected. You're still sort of in the mid sixes most of the time with an adjustable rate mortgage. And we are seeing people who are taking out fixed rate mortgages, anticipating that they'll be able to refinance in the next couple of years. They're not going to be able to refinance at 3%, but they may be able to refinance closer to 6% in the next couple of years.
All right. Lisa, thanks so much for joining us. Lisa Sturdivant, Chief Economist, Bright MLS, joining us. And I got my 6% mortgage. I said, I'm not too worried about this. I'll refinance with a 4 handle within a couple of years.
Not going to happen, buddy.
Not going to happen. It doesn't
No.
sound like I think people are
Unless we go into a horrible recession, and then you're refinancing as a Walmart greeter, right?
Yes, exactly, which that is very much on my career path, so don't worry about that. All right, right now, let's head down to Washington, D.C. Nancy Lyons has got world and national news for us.
Thanks, Paul. The White House is ordering flags to be flown at half-staff following the shootings overnight in Lewiston, Maine. Maine Governor Janet Mills says the death toll is climbing.
I'm profoundly saddened to stand before you today to report that 18 people lost their lives and 13 people injured in last night's attacks.
Mills says the suspect has been identified as 40-year-old Robert Card, who remains at large. Authorities are warning residents to stay inside and contact 911 if they see anything specific. We're hearing terrifying accounts from survivors. Brandon was at the bowling alley when the shots rang out.
I just booked it down the lane, and I slid basically into where the pins are and climbed up in the machine and was on top of the machines for about 10 minutes until the cops got there.
The shooter also fired on people at a local bar. New York Democrat Jamal Bowman is pleading guilty to a misdemeanor charge for pulling a fire alarm in a Capitol building. He entered his plea today in D.C. Superior Court as part of an agreement with prosecutors. He'll have to pay a $1,000 fine and write an apology letter to Capitol Police. Prosecutors, in return, will dismiss the charge in 3 months. The new House Speaker, Mike Johnson, has a long list of priorities and little time to achieve them. Bloomberg Government's Jack Fitzpatrick says he's expected to have a short honeymoon period.
He's going to be very aggressive on trying to get the rest of the government funding bills done, if it's possible to do something by November 17th. But he's already acknowledged that may not be possible. And he's already kind of pitched members on the possibility that they will need a months-long stopgap measure to give him time.
Again, that's Bloomberg Government's Jack Fitzpatrick reporting. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ very much in the red. In fact, lows of the day right now on the S&P 500 index, which sits at 4134, down now by 1.3%. The S&P is down 52 points. The Dow is down 218 points, a decline now of 0.7%, extending the Dow's year-to-date loss now to 1%. The NASDAQ Composite Index down 261 points, a decline now of 2%. The 10-year yield 4.89%, with the 2-year that's yielding 5.04%. Spot gold up $2.90 the ounce to $19.82, up by about 0.1%. And West Texas Intermediate crude down 2% now. Barrel of oil, WTI at $83.68. Brent, the global benchmark, $88.43. That is a drop of just about 1.9%. United Parcel Service shares down 4% right now. We've got UPS down by just about 4.5%. UPS reduced its annual profit target on a spike in costs from a new union labor contract and weaker package demand. Lee Glasgow is a senior transportation analyst with Bloomberg Intelligence, and he was a guest right here on Bloomberg Markets.
Well, I mean, at the end of the day, they had a tough slog with their labor negotiation. They lost a lot of business to FedEx and other carriers. They're in the process of winning that business back. They've won probably around 600,000 packages per day back of what they lost. And it's going to take some time for them to get it all back.
And again, UPS shares down by 5%, FedEx down now by 4%. Amazon reports after the close of trading today. Amazon ahead of that report, down now by just about 2.2%. Meta, which reported last night, Meta Platforms now down by 5%. So again, recapping, a lot of red on the screen. Lows of the day right now. That perhaps the key takeaway, the S&P down by 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Of course, Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming as well on YouTube, so check that as well. Boy, we started the year as an equity investor with such promise, had a great first 6-7 months of the year, but then it's kind of been a tough slog as the higher interest rates have really put pressure on risk assets like stocks. Let's see where we go from here. Katerina Simonetti joins us. She's a Senior Vice President, Private Wealth Management at Morgan Stanley. Katerina, thanks so much for joining us here. Again, it was a kind of easy first 6-7 months of the year if you were long stocks. A little bit tougher since then. What are you telling your clients?
Well, thank you for having me on the show. And you're exactly right. We started the year almost with this exuberance where the apparent risks in the market were, just absolutely, neglected, where we thought that the higher interest rates are here for short term. Inflation, was coming down nicely. We were, along the board kind of expecting the soft landing scenario. And the Magnificent Seven, of course, the best performing stocks in the market were carrying the indexes. And, as cautionary as most economists were being, kind of saying that how sustainable is it, the investors really wanted to almost will the bull market into existence. But, before we get there, the Fed at least, needs to see some data, and they need to see that their monetary policy has been effective. And inflation is coming down, but it's not quite at 2% yet. So despite of the robust labor market, we are, really are expecting that we're going to be in this higher interest rate environment for longer. And on one side, there are positives to this because we can enjoy higher yields on cash, on fixed income. We see a lot of opportunity in private credit, but on the other side, of course, the lending and, the pressures, that we see in the earnings space, that means that there are going to be some challenges we will be seeing in the market. So we're advocating defensive positioning to our clients.
How about in the fixed income market? Because now, as you mentioned earlier, you can get some real attractive yields. How are you telling your clients to maybe get some exposure to this higher rate environment?
Well, as we know, the interest rates, they take forever to come up, but when they do come down, it happens rather quickly. So we tell investors that, maybe not tomorrow and maybe not in the next 6 months, but eventually interest rates are going to be coming down. So this is this unique opportunity to lock in the rates and to upgrade the quality of fixed income portfolios. And we look at everything, from treasuries to corporate fixed income to municipals, really all across the board, and are extending the yields and making sure that our clients are going to be enjoying these higher rates for longer.
So, Katerina, it has all been about the Fed here for this market, but we are, in fact, in the middle of earnings season here, and we've had some modest revenue surprises and some pretty solid earnings surprises, but all in all, it doesn't feel like a great earnings season. What are you kind of looking for in this earnings season? What have you heard so far as we get about almost halfway through the S&P 500?
Well, earnings season has been mixed, and there are a lot of positive pockets in it, but this is the time where we need to start separating companies that are showing positive earnings because of the layoffs and cost-cutting techniques, and the companies that actually have positive cash flow and advantageous strategic positioning, because the quality and the healthy balance sheet is going to mean all the difference in the world going forward, especially as we expect that the market volatility is going to continue, because higher interest rate, higher oil prices, all of this, are putting, pressure on earnings, and it's very difficult to stay profitable, in this environment. So things might get worse before they get better.
Interesting. So in terms of the, defensive sectors, healthcare is one that often gets bandied about, but it's been underperforming year to date. How do you think about the healthcare space? Because, boy, that just seems like one that should be a relatively safe haven.
Well, not just healthcare, and I'm going to come back to it, but think of the core defensive sectors, industrials, healthcare, energy, all of the sectors that we generally, consider to be defensive, underperformed through the first part of the year. And specifically, healthcare is one of our favorite defensive plays because it has both defensive and yield, but at the same time growth components. So we think that it's uniquely positioned all across the board through the service providers and pharma and the insurance companies. We really see a lot of opportunity in this space, in addition to industrials, which is the sector that is benefiting from government spending, and energy.
Absolutely. So you mentioned energy here. We've seen it just whipsawing all over the place this year, and certainly over the last several months. And we're now, WTI crude oil is down about almost 2% today to just below $84 a barrel. It seems to be bouncing between, the high 70s and maybe $90 a barrel there. What is your thought on energy here? I mean, is there anything left in this trade? It's been actually a very good trade for the last several years.
Well, absolutely. And when we look at the long-term view on energy, high oil prices are here to stay, especially considering the recent developments, in the Middle East. What needs to happen for oil prices to come down and stay substantially down would be for the main producers to curb the production. And they're not going to do it. It's unlikely that they will do it at this, point in time. So we should expect that high oil prices are here to stay, which should, of course, benefit, energy companies. So we think that there are a lot of interesting plays there. They pay high dividends and they play, really important roles in the investment portfolios, specifically for their defensive qualities.
And just lastly, real quick, Katerina, tech, we've had some disappointments out of some of the big tech names the past couple of days. What are your calls on some of those big tech names?
Well, I think that the biggest misunderstanding when we talk to about tech and how some of these big tech names kind of just had the run up, we by no means are talking about abandoning the tech. Tech is here to stay. AI plays a major role. There's going to be great profitability there, but it does not mean that we shouldn't be taking some profits in the positions that performed so well for us. And if we are not in tech yet, this is the time for investors to kind of dollar cost average into the sector, because certainly it plays a permanent role in this nice, well-diversified portfolio. Tech is not going anywhere.
All right, Katerina, thank you so much for joining us. Katerina Simonetti, she's a Senior Vice President in the Private Wealth Advisor Group at Morgan Stanley, joining us to give us her thoughts on these markets. Just looking at the tape right here, S&P off about 1.2%. NASDAQ feeling it on the chin here with some of those tech names underperforming. It's off 2% here, the NASDAQ. Yields come in slightly. 10-year Treasury off 7 basis points, 4.88% on your 10-year. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Whirlpool is making market share gains in North America, but a shift in consumer spending is forcing it to make some changes. More from Bloomberg's Gina Cervetti.
The company points to a new dishwasher with a third rack, and washers and dryers with special filters for pet hair is doing well. Whirlpool did trim its full-year profit outlook, though. It's having to offer more promotions. An executive says some shoppers are switching to less expensive items amid higher inflation.
Shares right now, they're down about 16%. Meta Platforms squashed investors' hopes for a long-term advertising recovery, pointing to an uncertain economic environment. Now, this despite an upbeat earnings report and the company saying that it plans to spend heavily on newer businesses. Bloomberg's Matt Bloxham explains.
Advertising revenue was very strong. They grew revenues 23.5%, which is almost a doubling sequential growth. But yeah, the comments about kind of potential pressure into next year, obviously, with the business reliant on advertising revenue, if corporates start to kind of rein in their budgets, and that's going to have a noticeable impact. And they're continuing to spend big sums of money, billions of dollars a quarter, on their metaverse project without any obvious revenue coming through from that.
Meta shares right now, they are down about 5%. But some better news for IBM. The company reported better than expected sales and affirmed its full-year outlook. Right now, shares are up about 4%. But big tech still struggling. Bloomberg reports the so-called Magnificent Seven technology companies, they're wiping $200 billion off their market value and threatening to push the S&P 500 into a correction. Now, Amazon reports after the close today, with Apple and NVIDIA next month. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at this tape here with the S&P off 1.3%, the NASDAQ off 2%, off trading day for sure, risk-off day today. Yields pulling back as well, off about 6 basis points, 4.89 on your 10-year. Your 30-year, you're still getting paid north of 5%, 5.05% on your 10-year. Crude oil pulling back off 1.7%. We're now at just under $84 per barrel for WTI crude oil. And Bitcoin off another 2.6% here today. We're now at 33,800. So after that big surge above 30,000, starting to pull back just a little bit here. Let's head down to Washington, D.C. Nancy Lyons has got world and national news for us.
Thanks, Paul. A massive manhunt is underway in Maine for a suspect in a mass shooting that left 18 people dead, 13 injured at a bowling alley and a restaurant in Lewiston, the state's second largest city. Colonel William Ross with Maine State Police says they are looking for 40-year-old Robert Card.
He should be considered armed and dangerous. Based on our investigation, we believe this is someone that should not be approached. This is someone that should be, if you come into any contact with this individual or someone that you think looks like this individual, you were to call 911.
Ross says 8 of the dead have been identified, and Card has been charged in each of those cases. And Ross says the number of charges will grow as victims are identified. Well, the House has a new speaker and new questions about passing defense policy and farm bills. Bloomberg's Amy Morris has more from Washington.
House Speaker Mike Johnson has laid out a schedule to get some bills passed. He's pushed for oversight of the money going to Ukraine and has said he wants to keep that aid separate from aid for Israel. He could attempt to tie Ukraine aid to border security policies, which came up as a top priority in his inaugural speech. Johnson opposed a bill to send $300 million in aid to Ukraine, arguing that money is needed for U.S. border security. In Washington, I'm Amy Morris, Bloomberg Radio.
A tentative contract agreement has been reached between Ford and the United Auto Workers. The 4-year contract still needs to be ratified, though, by the 57,000 UAW employees at Ford. Union President Shawn Fain says wages will go up 25%, along with annual cost of living increases that will put the pay raise to over 30%. The deal means a top-scale assembly plant worker will make over $40 an hour by the end of the contract. UAW member Keith Jurgelvich says he is ecstatic.
Hopefully GM and Stellantis can get their deals done, and then that's, I don't know really what else to say, just historic day for us, that's for sure.
UAW negotiations are still underway with GM and Stellantis. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Paul and Matt.
All right, Nancy Lyons, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. Boy, cord cutting for the cable companies is still a thing. Comcast slid the most in more than a year after reporting higher than expected losses in broadband and cable subscribers for the third quarter. Cord cutting and increasing competition have eroded Comcast's traditional customer base. The company, which owns Xfinity, the NBC Universal Media Empire, and Sky TV, lost 490,000 cable TV customers in the quarter, an ongoing trend as consumers switch to streaming services like Netflix. It also lost 18,000 broadband subscribers, those are the internet subs, in the quarter as well, though its revenue per customer climbed in part because of price increases and promotion of higher rate plans. Shares fell as much as 8% Thursday, their biggest intraday decline since July 2022. Comcast expects somewhat higher subscriber losses in the fourth quarter due to pullback on promotional offers that targeted lower-end customers. That's Chief Financial Officer Jason Armstrong said in a call with investors. Broadband is becoming increasingly competitive as mobile providers move into the market with improved wireless internet offerings. In the past week, the big three, T-Mobile, AT&T, and Verizon Communications, all reported subscriber gains. So tough times there for some of those cable operators. Looking at the markets here, as you come to the top of the hour, the S&P 500 off 1.3%, the NASDAQ off 2%. Looking at the yields pulling back as well. The 10-year Treasury off about 6 basis points, call it 4.89%. WTI crude oil just under $84 per barrel. A little bit of weakness there. And Bitcoin also off 2%. So keep an eye on that. Coming up, Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The Democratic leader in the House calls on the new speaker to take shutdown off the table. And Israel conducts raids in Gaza to prepare for the next phase. Welcome to the fastest show in politics, with twin leads this day in Washington after the new speaker was installed and Hamas now claims Israeli raids have killed almost 50 hostages. We'll talk about the next steps in Israel and the threat posed by Iran coming up with retired Army General Wesley Clark, the former Supreme Allied Commander for Europe, with analysis today from our signature panel. They're both back with us. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano will be with us for the hour to distill a lot of information from the past 24 hours here in Washington. A bit later this hour, a special conversation with the Secretary of the Treasury, Janet Yellen, is with us today in our offices at Bloomberg in Washington. Our bureau chief, Peggy Collins, will be conducting an interview across the platforms here, the radio, the satellite, and YouTube, coming up in just about a half hour's time. So you want to stay with us for an important conversation ahead as we begin on Capitol Hill now and welcome General Wesley Clark to the conversation. It's good to see you, General. I know you're on Capitol Hill as you join us today from the Russell Rotunda to talk with senators about threats posed by Iran and our policy towards Iran. I'd like to start by asking you, though, about the urgency around a supplemental budget request, that now there is a new speaker, there's going to be some action on this, and your thoughts on how quickly and what is needed for Israel now.
Well, we need the full request that the administration's made. We need it passed as rapidly as possible. And let's not forget, it's not just Israel, it's also Ukraine. The two are linked. Russia and Iran are strategic partners. And you can be sure that Vladimir Putin is really happy to see what's going on in Israel. How much he had to do with it, maybe we won't know for a while. But we know Iran had a lot to do with it. We have to understand that both actions are threats to democracy, the international order, the rule of law in the world today, and of course, obviously, to our business community internationally. So we have to keep both in mind. We need to get those appropriations passed immediately.
Well, there does seem to be an appetite for supporting Israel in this case, General, but there is an argument over funding for Ukraine, and I know that the Republican conference in the House is looking to bring an Israel-only bill to the floor. What do you make of this argument? $60 billion for Ukraine, with some members saying not another dollar, but the president, as you just put it, is trying to link the two together as a matter of national security. You see continuity between these two requests?
They are linked together. Vladimir Putin is working with Iran. Iran's working with Putin. Yes, they're linked. But also understand this, that $60 billion for Ukraine, most of that money doesn't go to Ukraine. That money goes to the United States. That's keeping and building up our industrial base to face the challenges of the Middle East, to face future challenges in NATO, and of course to face the challenge of China. We've let our industrial base, our military industrial base, deteriorate over the last 30 years since the end of the Cold War. Yeah. We allowed a wholesale consolidation of defense industries. We reduced the rates of supply that we need. Everything is just sort of half step. We've got to put that money into our own base. The appropriations we've already given to Ukraine, that money went to American firms. We just gave them a bunch of old equipment and old ammunition. We need to keep that system alive and strengthen it for the challenges ahead. That's why putting Ukraine in that appropriations bill is so important.
Well, there's so much to talk about here, General. We talk about the DIB here on the program, the defense industrial base that you're referring to. This goes for Israel as well, and I think that's your point, right? If we're going to be making missiles
to replenish the Iron Dome, for instance. We do not have a manufacturing chain, according to companies like Raytheon, to make them fast enough. How do we accelerate that process? Does this supplemental request do it?
Supply and demand. Put the money into it, the companies will respond. But without that funding, no, they can't hire the people, invest in the capital goods that are necessary, create the supply chains. No, they have to have contracts. And these are multi-year contracts, procurement contracts by the Defense Department. And that requires a funding. So it's very simple. And if you don't do it now, who knows what's going to happen in 24, 25, 2026, 27 with Taiwan. So all of this is linked. You can't artificially separate it.
Well, are you hearing that message received on Capitol Hill today? I trust you're talking with members of both parties. I know you're briefing senators today on our Iran policy. What do they say to you about this matter, the supplemental request, and the need for a more streamlined and enhanced manufacturing chain?
Well, I think they're all generally in support of this in the United States Senate. The question is the House. And there's a lot of, let's say, misunderstanding in the House about what the funding for Ukraine actually does and why it's needed. And hopefully this can become something that can be corrected by information and not just sort of a partisan tagline. But the big thing up here today is Iran and what we're going to do about Iran. You know, we've tried for 40 years to work with this government in Iran. We've pulled on it, pushed on it, we've appeased it, we've patted it on the back, we've sanctioned it, we've threatened it. Nothing changes the direction of this Iranian government. They use terror and murder at home and abroad. They want regional dominance. They've destroyed the state of Lebanon. They've built a huge military complex, and they've forward positioned it through Hezbollah, ready to attack Israel. Look, this crisis in Hamas brings this to a head. Can't appease this government in Iran. It's time to let the Iranian people have a government that represents them. And that means we, the United States, and our allies need to delegitimize the Ayatollahs. Get rid of them in international organizations. Cut off their access to funding. Sanction them individually. Get after their families. Stop this government from having control over its people. Doesn't take a war. Don't want an invasion. But if we keep going the way we're going, Iran is going to provoke a war in the region. And that's the danger.
Well, I'd like to ask you more about that. Let me first ask you about the Biden administration's repeated message that there is no actual evidence that Iran was directly involved in or helped plan or fund the Hamas terror attack. Do you need to see that evidence, or is that kind of missing the point in this conversation? You're pointing to a long history that the administration has also acknowledged, but without that evidence to put the two together, the president seems to be a bit tied up on this. What do you think?
Well, I think it's what the administration's appetite is for acting in many different directions at once, and what the capacity is. Washington typically is a one crisis at a time town, and you know, we've got a crisis right now. We're worried about what Israel will do in Gaza. Will they have the support they need? What about Hezbollah? And what I'm suggesting is you got to go to the source, and the source is Iran. Now, is it the immediate source? Did the Iranians tell the Hamas people on this specific day, I want you to go out this specific gate, come in with these paragliders, kill these people? No, probably not. But we do have evidence that they trained a bunch of Palestinian fighters as late as September. We know there are meetings that have been held. Do we know what's said in those meetings? Well, not at the unclassified level, and maybe we don't even know at the most secret level. It's a question of how the administration sees its way through the crisis. And what I'm suggesting is that you have to be able to do more than one thing at a time. You've got Ukraine. That's at a critical state right now. They need sustainment, and they're facing a really tough Russian attack in the northeast. You've got Israel and Gaza, and then you've got the region. And so in the region, you have to understand the source of these tensions. It is Iran. And there's nothing like a crisis to bring on a path to a resolution. And in this case, the resolution is to delegitimate that government in Tehran.
There's talk about a second or third front opening. I know that's a great fear of the administration and the Pentagon, General. But when you look around, we've already seen incursions repeatedly to the north. We've seen attacks against U.S. military installations in Iraq and Syria. We've seen an American warship intercept cruise missiles from Yemen. Are the second and third fronts already hot? Is this already happening?
Well, let's put it this way. They're warming it up. But I don't think the decision's been made by the Ayatollahs to really open up the northern front yet. It's just it's nuisance right now. Yeah, they're killing people, they're firing, but they haven't really committed. They want to wait and see what Israel is able to do in Gaza, whether it's so deeply enmeshed in Gaza that it can't defend itself from the north, whether the whole world turns against it because of the need to bring heavy firepower in an urban area to dislodge Hamas. If they can bring world opinion totally against it, isolate the United States and Israel, if they think the Israelis can't protect themselves from all three directions at once, then maybe they will unleash Hezbollah. And they haven't made that decision yet, so far as we can tell publicly.
General, while you're with us, I want to ask you about the matter of military readiness and the blockade on military promotions in the Senate. You might have even spoken with Tommy Tuberville today, but there's a new effort that Democrats are making to send a resolution to the Rules Committee that would allow 300 plus promotions that have been held up to all go to the floor at one time. Would you support that move, or does it set a bad precedent?
Oh, I think it's essential at this point. Look, Senator Tuberville's made his point. Everybody understands where he stands, what he stands for, that he's a man who's willing to fight for what he believes in. Okay, enough is enough. Let's get on with getting these military leaders and their families in the right positions and preparing for the challenges that are on our doorstep right now. There's no time to waste on this.
Is it impacting our readiness?
There's no doubt about it.
Have you talked to Tommy Tuberville to let him know your thoughts?
Well, I haven't talked to him on this. No, I'm one of many in the retired general officer ranks who's watching this very anxiously. I'd be delighted if he would call me and ask me for some assistance or advice on it. He's got to back his way out, and he hasn't been willing to do that. But you know, he's a senator. He's due his respect, and he has the right to put a hold on nominations, but enough's enough. Let's get on with the business of the United States government.
You've been generous with your time today, General. I wonder, lastly, as you're speaking with senators, are you also talking to the administration about policy toward Iran, next steps, sanctions, whatever you think the next step should be?
Well, I talk to anybody who will listen on this. This is a looming crisis that we've seen coming for some time. And there's an odd thing about Iran. When things are quiet and they're not attacking our troops and there's diplomacy going on, people say, well, don't worry so much about it. Let's don't shake the tree. And then when there's a crisis, people say, oh, this is a crisis. This is no time to change the policy. And so we never seem to want to move past what's been 40 years of fruitless efforts one way or another to engage with this Iranian regime. It is time to recognize that this is an illegitimate regime and get it out of international legitimacy.
General Wesley Clark, we appreciate the time and the insights today on Bloomberg. Thank you for joining us.
Thank you.
This is Bloomberg Sound On. I'm Joe Matthew in Washington as we assemble our panel here. The day after, we got a speaker. Rick Davis and Jeannie Shanzano are with us now, Bloomberg Politics contributors. Great to have you both here. Jeannie, what's your thought about what we just heard? Because the general sounded a lot like Rick Davis, to be honest, with regard to Iran. This is, of course, a man who ran for president as a Democrat. Is there daylight between what he's saying and what we're hearing from Joe Biden?
Yeah, I mean, it's a fascinating conversation because I do think there is a divide in the Democratic Party on this, and there has been for some time. We can go back to Barack Obama's approach to Iran, but you can go back even further. And I think he is echoing what is a sort of in the momentum continuing to gain hold, which is that efforts to what some people describe as appease or some people describe as contain. I mean, there's a lot of different adjectives you can use. Iran simply have not worked. And what has happened since October 7th, but even earlier, is proof positive of that. But the problem is there is very little agreement on where to go forward and how to go forward. I mean, Sherrod Brown's view on what the banking committee alone should do on Iran is fascinating and shows this divide. So there's a necessary conversation, and you were just having a really key part of it with somebody with very strong views on this.
Yeah. What do you think, Rick? What should the next move be for the Biden administration? The generals on Capitol Hill to sound the alarm today. Do they need to move past the idea of finding evidence that links Iran? I mean, the general's talking about shutting this down, even going after their families.
Yeah, I think it's parsing that's actually just going to make them look weak in the eyes of the American public. Look, I mean, Iran has been a horrible influence in the region and around the world for as long as the Ayatollah has been running it. And we've allowed that to sustain itself. We're afraid of the development of their nuclear weapons. We don't want to get in a scrape with them in the Middle East. And yet they dictate all the terms that occur there. I mean, the reason that this is all happening is because through U.S. efforts to normalize relations between Saudi Arabia and Israel, they put a kibosh to it. And so, like, who's not surprised by all this? And this naivete within the Biden administration that they can somehow do business with Iran, but let them be a purient interest in the region is absolutely insane. They've got to rationalize this in their relationship with Iran in a way that is absolutely clear to the American public, which is Iran's the enemy. They've always been the enemy. They're always going to be the enemy. They don't have the same views around the world, values that we all hold dear on human life. And just look at what they've been able to accomplish in the region, supporting Hamas, supporting Hezbollah, supporting Syrian Islamists. I mean, there's nothing positive about their conduct whatsoever. So let's quit saying, oh, well, there's no direct evidence that they pulled the trigger. It's a little bit late for that.
We'll have a lot more with our panel, Rick Davis and Jeannie Shanzano. We haven't even gotten to the matter of the speaker race. The new Speaker of the House, Mike Johnson, making waves already today in Washington and meeting with Biden administration officials about avoiding a shutdown. We're going to get to that next with Rick and Jeannie on the fastest show in politics. I'm Joe Matthew in Washington. Thanks for being with us on the radio, on the satellite, and on YouTube. Search Bloomberg Global News to find us. This is Bloomberg.
Profits, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. A lot of moving parts in today's session right now. We're just about at the lows of the day, but we're looking at earnings, that GDP number this morning, the ECB. And then, of course, after the bell today, we will be hearing from Amazon.com. A slide in big tech sent the stock market toward its lowest since May after another round of disappointing earnings. Case in point, Meta Platforms, that stock right now down by 4.7%. S&P 500 index down 51, down 1.2%. It is edging closer to a so-called correction, down almost 10% from its July peak. The Dow now lower by 235 points, down 0.7%, extending its loss for 2023 now to 1.05%. The Nasdaq Composite Index is down 258 points. For Nasdaq, a drop now of 2%. 10-year yield 4.83%, with a 2-year that's yielding 5.02%. Spot gold up 0.4%, 1986 the ounce, while West Texas Intermediate crude is down 1.9%, 83.74 a barrel right now on WTI. Amazon is expected to offer an update on efforts to improve the profitability of the core retail business and revive growth in the cloud computing group when it reports results after the close of trading later on today. Amazon right now down by 2.2%. The Bloomberg consensus looking for net sales of $141.56 billion. Again, recapping the Dow, the S&P, and Nasdaq all very much in the red. S&P down 54, a drop now of 1.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Live from Washington with breaking news on the new Speaker of the House. It's the first full day on the job for Speaker Johnson, meeting with Biden administration officials, easy for me to say, on the big funding request we were just talking about with the general here. A bipartisan briefing with congressional leadership. This is the first time the Speaker is interfacing with the Biden administration as the man who holds the gavel. And it's coming less than 24 hours after the big celebration on the steps of the House after he made the grade. He was joined by all the members of the Republican conference, and it was a love fest.
We're going to act consistently, and we're going to exhibit two things here: trust and teamwork. And this group will deliver for the American people. I said it in the chamber, and I will say it here. We're going to govern well.
We're going to govern well. Endorsed by everyone else who wanted to get the job, including Steve Scalise.
You know, if you think about what's happened these last 3 weeks, while a lot of people outside of Washington talk about dysfunction, this great group of men and women behind me have been talking about how to fix what's broken in Washington. So
this was really good for everybody. Ask Tom Emmer. This is like the best time he ever had, I guess. Remember, he had the nomination for, I think, 4 hours?
From an outside point of view, these last few weeks probably looked like total chaos, confusion.
Oh, I don't know.
No end in sight. But from my perspective, this is one of the greatest experiences in recent history of our republic.
We couldn't have planned it better. Let's reassemble the panel. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Haven't heard from either of you yet. Can't wait. Rick, what do you think of our new Speaker of the House?
Well, I'm holding my breath. Is he a member of the Vote No, Hope Yes caucus? He voted against Ukraine funding when all three of those people, McCarthy, Emmer, and Scalise, voted yes. What kind of leadership is he going to give if he's opposing those kinds of things? I don't know. I'm very nervous that we've got a deadlock House of Representatives. It's only going to make bad look worse.
Wow. Joe Biden was asked about him yesterday, Jeannie. He was in the Rose Garden with the Prime Minister of Australia. The question, pretty obvious for this president, knowing that this is not only an election denier, but someone who actually wrote the amicus brief in the Texas case to bring this to the Supreme Court. Here's how it went at the White House.
If you win re-election in 2024, are you worried that a Speaker Johnson would again attempt to overturn the election?
No. Why not? Because he can't. Look, just like I was not worried that the last guy would be able to overturn the election. They had about 60 lawsuits and all the way to the Supreme Court, and every time they lost. I understand the Constitution.
Do you share his confidence, Jeannie?
Well, I applaud Joe Biden, unlike Mike Johnson, for answering the question. Because, of course, yesterday when Mike Johnson was asked the question, it was Virginia Fox, I think, who said, shut up to the reporter. So, he's a constitutional lawyer, described as a constitutional scholar, but he does not want to get up there and answer questions. So thank you to the president for answering. The president seems confident. I'm going to go with Rick and say I'm holding my breath on this aspect of it. Mike Johnson, and I'm so glad you raised that amicus curiae brief. It's one of the most confounding things that he would write the brief to help the disgraced Ken Paxton try to say that Texas can overturn the votes of 4 other states, something that the hardliners on the Supreme Court found so baffling constitutionally that they didn't even take the case. And that is Mike Johnson. We don't know how he's going to behave as speaker. He may turn out to be a great speaker. We simply don't know. But the reality is we know what he's done before, and that is lead the effort to vote to overturn the 2020 election, defend Donald Trump, and also support Ken Paxton in the ridiculousness of Texas overturning other states' votes for the presidency.
Rick, we only have a couple of minutes before our sit-down conversation with the Treasury Secretary. How concerned are you that every member of the Republican conference voted for an election denier?
Yeah, look, I think it's a bad form. I'm shocked that Emmer didn't press the point of actually having a floor vote for his own speakership candidacy. Frankly, I suspect a bunch of Democrats would have voted for him because, in retrospect, you look at that and say, "Gee, we could have had Emmer." Democrats are going to really pay a price for not having the opportunity to put a reasonable Republican in the seat who actually believed the elections weren't flawed. So this has been a horrible 3-week period for the Republican Party. I think the onus is going to be on Speaker Johnson to try and right that ship. Nothing in his background indicates that he has the ability to do that. So this is a real test by fire.
Jeannie, we heard from Hakeem Jeffries, of course, the Democratic leader, earlier today. He was asked about how he's going to work with Speaker Johnson, planning to meet today. Here's how he answered it.
I do expect to have a conversation with him today at some point later on this morning or this afternoon. And I do expect that in the context of that conversation, the urgent need to support the Ukrainian people will come up. Supporting Ukraine is the right thing to do.
The right thing to do, he says, but it's, of course, something that remains unknown as we head for a potential government shutdown. Great conversation, as always, with Rick Davis and Jeannie Shanzano. Thank you both to our panel. We now go to a special fireside chat with Treasury Secretary Janet Yellen and Peggy Collins.
Came out this morning. Third quarter GDP showing a robust 4.9% growth rate pace in the third quarter. When you look at those figures, do you think we've likely avoided a recession, or do you think it's too good to be true because inflation is still so high?
Well, it's a good, strong number, and it shows an economy that's doing very well. Let's remember it is just one quarter's number, and I'm not expecting growth at that pace to continue, but we do have good, solid growth. Probably the year will come in close to 2.5. I wouldn't be surprised if we see that. We have solid job creation, a low unemployment rate, increased engagement in the labor force. Labor force participation is strong. More people want to work. And inflation's coming down. And you don't really see any sign of recession here. I have to say, I've been saying for a long time that I believed there was a path to bring inflation down in the context of a strong labor market. Frankly, it's about a year ago since I believe a Bloomberg model predicted that by October of 2023, now namely, that you saw the odds of recession at 100%. I don't think we have that. What we have looks like a soft landing with very good outcomes for the U.S. economy. So I think there's a lot to be pleased about. And you see good, strong consumer spending. Consumers still have substantial wealth. It's up substantially since the pandemic. I think it's supporting good, strong spending, and the economy is doing well. And I think, U.S. growth is making a contribution to stronger global outcomes as well.
So you just pointed to a number of things that are positive about the U.S. economy, but we've done a lot of reporting in recent months here at Bloomberg. We sent reporters out all across the country, and what we're hearing from people on the ground is that when you ask them about their personal finances, they feel pretty good for a lot of the reasons you just mentioned: the labor market, their ability as consumers year.
So I think Americans have been through a lot with the pandemic and the lockdown for almost 2 years, then a period of high inflation. And as you say, they do seem to feel good about their own personal finances. Surveys of job satisfaction suggest people feel good about their work too. We've rarely seen higher numbers on job satisfaction, but they seem very worried about the economy and that things are not doing well. The U.S. economy has suffered from structural problems for a very long time. A significant share of the population, particularly those who haven't had a college education, have really not seen meaningful growth in their real income and have seen a decline in job opportunities over really approaching 50 years. And I think what Americans need to know is that the Biden-Harris administration is really decisively changing that. We are investing in America. We have passed a trifecta of legislation that people will increasingly see who've been suffering from a shortage of job opportunities. I think they're really going to see things change. First of all, we're spending an enormous amount to repair America's infrastructure. And increasingly, people are going to see their roads that they get hung up on every day. It's hard to commute with potholes everywhere. It's going to be fixed. Bridges are going to be improved. Airports, people are going to, within the next several years, virtually every American will have access to good internet, so improving digital economy. And we've seen an enormous set of investments announced in response largely to the Chips and Semiconductors Act and to the Inflation Reduction Act in clean energy. And jobs are being created. What we see in this past year is that a disproportionate share of the jobs that are being created are in communities that have had less economic opportunity, communities with below average incomes and with a below average share of people who have a college education. So this means that opportunity will increasingly come to people who really haven't, in a sense, gotten a fair shake over the last 50 years as they've seen jobs disappear. And, President Biden and Vice President Harris and I really believe that you ought to have access to a good job, even if you don't have a college education. And increasingly, I think people will see that good opportunities are being created. Certainly, the president is trying to go out and explain to people what this longer-term, medium-term agenda He would say it's a matter of growing the economy from the bottom up and the middle out. What we've had is too much of trying to grow the economy through trickle down from with gains going to the top with the hope that it'll trickle down. And I think we're beginning to see the fruits of these investments beginning to pay off. So I think Americans have a lot to look forward to and are beginning to see this in their daily lives.
So we were just talking about Americans' perception of the economy, but another thing we follow closely here at Bloomberg globally is investors' perception of the economy. So I want to ask you a little bit about the rise in yields that we've seen. We've seen yields surging over the last few weeks. The 10-year Treasury rose above 5% earlier this week. What's your view on what is driving that surge in yields and how much of it is connected to investors' concerns about the U.S. deficit?
Well, I don't think much of it is connected to that. This is a global phenomenon in advanced countries. We're seeing yields go up in most advanced countries of the world. And largely, I think it's a reflection of the resilience that people are seeing in the U.S. economy, that we're not having a recession, that consumer spending and demand continue to be strong. The economy is continuing to show tremendous robustness, and that suggests that interest rates are likely to stay higher for longer. And so part of the increase in yields, I think, is simply a reflection of the strength of the economy, the notion that interest rates will be higher for longer. Now, whether or not that's really true, if we look at 5 or 10 years, what are interest rates likely to do? Honestly, for a very long time, we've felt that interest rates over decades had been coming down, real interest rates, and that there were deep structural reasons for that, in part relating to demographics. And those underlying trends, they're still there, they're still in force. So I think it's perfectly possible that we will see longer-term yields come down, but nobody really knows for sure. But I see the higher yields as certainly importantly a reflection of a stronger economy.
So when you think about the deficit, I think one of your preferred metrics for assessing, U.S. fiscal stability is to look at the net interest outlay as adjusted for inflation. And right now, I think you've said that those levels seem good to you, but there are...
In real terms, it's about 1%, a little bit under that.
So that's helpful in terms of kind of the next figure I was going to mention is several economists out there are forecasting that figure by 2030 could be well north of 2%. So at that level, would you be alarmed in terms of the fiscal sustainability?
Well, let me just say fiscal sustainability is really critical, and President Biden is committed to putting forward a fiscal plan that shows fiscal sustainability. And uncertainty about interest rates do influence what the path of that real net interest is going to be. There's a bigger challenge if the interest rate path stays higher. President Biden has already supported deficit reduction measures in the pact raising the debt ceiling and other legislation in the Inflation Reduction Act. There's $1 trillion of deficit reduction, and he proposed a budget that both invests in America, continues to do that, and also has revenue-raising measures that would result in another $2.5 trillion of deficit reduction over the next decade. So, yes, we have to put forward fiscal plans that will keep the deficit manageable and keep this real net interest cost, I would say well below 2%. So the higher the interest rate path, the more that we need to do.
I want to take a moment, Secretary, and turn to the global outlook. With the Israel-Hamas war happening in the Middle East, I think there's a concern by some that the war could spread or expand to broader in the region. I know that that's not your base case, but if that was to happen, could you walk us through your risk scenario for what that might mean to the global economy?
So I guess I have to say my focus as I look now at what's happening to the Middle East really is the tragedy, the human tragedy that's taking place, what the Israelis have suffered, and of course we're worried about casualties in Gaza as Israel, pursues its war against Hamas. And so it's really the human suffering that I think should be our focus in countering terrorism. We're monitoring the economic consequences carefully. So far, I would say we've not yet seen much that has global consequences. Oil prices are largely flat. What could happen if the war expands? Of course, there could be more meaningful consequences, but I think it's premature to speculate about those, and I think our focus should be keeping this contained and not spreading.
So on Hamas, I know the Treasury Department has taken further moves in the last few weeks to restrict financing to Hamas, and your Undersecretary, Brian Nelson, is actually in the Middle East right now. Do you think there's room for further restricting or limiting financing to Hamas? And if so, can you tell us what might be some of the next steps?
So I can't comment on any specifics concerning sanctions we've not yet put in place. But what I can say is we have taken a large number of steps just over the last year to put in place sanctions to try to reduce the avenues for financing of Hamas. And in the aftermath of this attack, last week we put additional sanctions in place. My undersecretary, as you mentioned, will be in the Middle East, and Deputy Secretary Adeyemo is leaving tonight for a trip to Europe to also discuss working with our allies on sanctions. And we are certainly looking at further opportunities we see to try to reduce this flow of financing to Hamas. We're all over this and are likely to do more.
So one final question on the Middle East before we turn to other topics. On Iran, can you help us understand, are the $6 billion in Iranian oil proceed assets blocked by the U.S. Treasury from access by Iran right now as they sit in a Qatari account?
I guess all I can really tell you is that not a penny of that money has been touched. The Trump administration agreed to allow Iran to sell oil, and the sales were largely to Korea, and the proceeds were held in a Korean bank account and only permitted to be used for humanitarian purposes, without any direct funding ever going to Iran. And those proceeds were moved from Korea to Qatar. They still sit there. They can only be used for humanitarian purposes. They have not been used, and I don't feel comfortable saying more about diplomatic conversations that are taking place. But Iran has not touched those funds.
Well, you just mentioned diplomacy, and so much of your role as secretary has been actually traveling around the world. We often think of the Treasury Department as so domestic, but so much of what you've done is international. And you're seen as a liberal economist, supportive of free trade. I wondered your thoughts on how concerned are you that some of the Biden policies may be sealing a mistrust of globalization that was ramped up in the Trump administration, and whether that's actually good for the U.S. economy?
Well, I think that's a great question. I've talked about a concept I call friendshoring. So I think as a consequence, partly of the pandemic and partly Russia's invasion of Ukraine, we've come to the realization that our supply chains, America's supply chains, are not secure. And in some cases, we're overly dependent on countries like China. And that what we need to do is to take steps as a country to reduce our vulnerability and to diversify our supply chains. And to some extent, that involves reshoring things to the United States and doing more here. And certainly in the area of clean energy, the Inflation Reduction Act has incentives to do more in the United States. And the desire there, in part, is to create good jobs in industries that are likely to be drivers of future growth, whether it's semiconductors or clean energy. But we don't want to forego the benefits of globalization and trade. And so the idea of friendshoring is that we want to be able to rely on a broader set of countries to do trade and investment, to deepen our trade and investment relationships with countries that we feel are trustworthy, that can be reliable parts of a global supply chain that we take part in. And part of what I've been doing is traveling around the world, talking to countries about developing our supply chain relations. And of course, we're very close partners with Europe, with Canada, Mexico, other countries with whom we have free trade areas, but many more countries. We're deepening our relationships with India, with Vietnam. So we want this to be broad. We understand that the international division of labor with countries taking advantage of the benefits of comparative advantage, doing what you're most efficient at, relatively efficient at, that this is a great set of benefits, both for the United States and also countries that are given the opportunity to trade, and that contributes to their growth. So we don't want to forego that. And we do want to maintain the benefits of globalization, but without the vulnerability that comes from undue reliance on a few countries that may restrict trade for political or other reasons.
So you mentioned broadening our network of friends that we can have partnerships with, but also China. I know you took a trip to China to Beijing this summer. You've been talking about how our policy should really be around de-risking or diversifying rather than decoupling. But what do you think is the current status of that? Do you think the Chinese have adopted that and feel like they can trust us on that front, or do you think they still really think that we're in a competition with them first and foremost?
So, I mean, we've articulated a strategy. As you said, it involves de-risking in some areas where we're overly dependent on China, and clean energy is a good example. We also intend to focus on national security. That's an area that we're not willing to compromise on. And so we do have export controls. We continue to review them. We're working on a set of restrictions on outbound investment to China. We've discussed this with them and put out a proposal that's in the public domain. I think comments just closed on it. But our objective there is to target what we do as narrowly as possible so that it really focuses on national security, that it is not an intention in that to harm the prospects of Chinese economic development and the welfare of the Chinese people. So we intend to have healthy competition and mutually beneficial trade and investment with China in many areas. I've tried to make this clear. And then importantly, the third prong of it is we need to work together on global problems. Debt relief is one of those problems. Climate change is another, but there are many examples. So that's what we're trying to do in terms of our strategy. You know, President Biden and President Xi met in Bali. I guess it's just over a year ago. I was at that meeting. In more or less over 2 years, almost no senior level contact had taken place during the pandemic between China and the United States. And I think that was a dangerous situation. And especially when there are disagreements, it's actually important to be able to discuss them, to talk through, to see the other country's point of view, and to discuss areas where you're not in sync. And it was recognized by both sides that we needed to talk more, to deepen our discussions, exchange of information, and particularly in economic areas, macroeconomic performance, financial markets, where our behavior has spillovers back and forth to one another, and also our decisions affect the global outlook as a whole. And that's what I tried to begin in my meetings that I had in China. And things have continued very positively from there. We've formed 2 working groups. They report to me and my Chinese counterpart, He Lifeng. One concerns economic matters, the other financial matters. The working groups met earlier this week. Both of them met, and we now have a set of very constructive and deepening discussions about areas of mutual concern. And it's good to have contacts throughout our chain at levels below secretary, staff level discussions, and channels of communication where when a problem arises, each side can pick up the phone and discuss it before it rises to the level of a really serious disagreement. So I think this agenda is working. We certainly will continue to deepen our economic relationship and discussions, and I'm feeling very good about how things are going there.
Turning back to the U.S., Secretary Yellen, you've described the Biden administration's economic policies as something you referred to as modern supply-side economics. And with those policies, they're aiming to increase the productive capacity in the U.S.
That's right.
That's a pretty good big goal. So can you talk to me a little bit about how long do you think it's going to take for some of those policies to become entrenched enough that they stick and have a real impact on people? And the reason I'm asking is because I'm looking ahead to next year. The election's coming up. What's at stake if the Democrats don't retain the White House in terms of the ability for some of those policies to take hold?
So, yes, modern supply-side economics, it's in part a growth strategy. And this is something Republicans and Democrats, I think, share a desire to see real wages and incomes increase, to see economic welfare for the broad set of Americans to improve over time, and an economic growth or, quote, supply-side strategy. This isn't a matter of demand management. It's a matter of improving our economy's ability to produce goods and services over the medium to long term. We, I think, agree on that. It's widely accepted. The Republican strategy has been, as I said, largely a trickle-down strategy of giving tax breaks or deregulation to the rich and to corporations in the expectation or hope that benefits would trickle down more broadly. I see that as a failed strategy, and one that has really not been successful at creating broad shared prosperity. And I see modern supply-side economics as having the same objective, but proceeding in a different way. And there are many factors that are inputs into growth besides private investment. For too long, we ignored infrastructure. So investing in America's infrastructure has a return, produces benefits. R&D, we're now really, after having decades in which U.S. spending on research and development, certainly at the federal level, had fallen to very low levels. We were no longer one of the leading countries in terms of the resources we devote to R&D. That we've stepped that up substantially in the legislation that's been passed. And what we want is also growth that's equitable. So addressing inequality is, I was saying, for over 50 years, essentially the median American really saw very little growth, little or no growth in their real income. We want to change that. We want to make sure that opportunities are created, especially for those who don't have a college education and live in places, we've had so much growth on the coasts, but many parts of the country, geographies, that it seems progress is passed by. And so if you look at the legislation that's been passed and the investment plans that have been announced, we've seen over $600 billion in new investments that have been announced. Now, it takes a while to get those in place, but look at where those investments occurring. They're occurring in parts of the country that have not seen that kind of investment. And, we're seeing electric vehicle production and battery production in many parts of the country that have been sorely hurting for good jobs. And so it will take a while for Americans to see the benefits of this. But even now, I think many Americans can see that good jobs are being created in manufacturing, which is not done well over decades in the United States. So I believe that opportunities will be created and people will be able to see that over time in their daily lives.
No matter what. Secretary, you've been in public service nearly 5 decades now, holding the...
It's a long time.
It's a lot of working years as a labor economist. I will say that you've held the top economic posts, across the CEA, Fed, and now Treasury. But you're also known as a technocrat and a policymaker rather than a political animal per se. When you look at the divisiveness in Washington, and we've just seen in the past few weeks, even just on Capitol Hill, are you concerned that there's less and less room for a person like you to come into government in Washington and make a notable difference at the highest levels if you're not as politically driven as policy driven?
I guess I see that we have a government that is filled with people who are professional, technically proficient, and dedicated to good policy. And we are trying to put in place good, sound, technically solid government policy in almost everything we do. And in spite of the difficult political environment that we're in, President Biden and Vice President Harris, in the time they've been in office, have succeeded in a bipartisan way in having a great deal of meaningful legislation passed. The Treasury Department, I spend a good share of my time working with very capable people in our tax policy department. We're charged with writing all of the rules that are governing the tax incentives in the Inflation Reduction Act, those that are really creating enormous opportunities in connection with clean energy. And we've gotten an allocation of funds to restore the Internal Revenue Service, to restore their ability to both serve American customers who deserve to have somebody answer the phone when you call, and have been missing that for a long time, and also to actually collect the taxes that our tax code says people owe. And when you think about the fact that over 10 years, the tax gap, namely the quantity of tax revenue that's due but not paid, is estimated at $7 trillion. We're in the process of restoring all of that, and the people who are doing this are largely a civil service that is tremendously competent, professional, and dedicated to making the United States function well. So I think there's plenty of scope for good policy, and I hope we're in the process of doing it in spite of some of what seems like political dysfunction in our country.
Well, Secretary Yellen, thank you so much for joining us today and giving us so much of your time and sharing your insights. It's a true
pleasure. Thank you so much. Thanks for having me. Thank you.
All right, there you have it, live from the Bloomberg Washington, D.C. Bureau, a special conversation with the Treasury Secretary, Janet Yellen. And big thanks to our Bureau Chief, Peggy Collins, for driving a fascinating conversation that obviously you're only going to hear here on Bloomberg. Welcome to Sound On. It's Hour 2. I'm Joe Matthew in Washington, joined now by Kayleigh Lines, who was in the room for that conversation. You made it down the hall pretty quickly. Good to see you.
Thank you.
We did learn a few things, a little bit of news today from the Treasury Secretary.
Yeah, well, of course, it was a great day to have her here at Bloomberg, as this was a day where we got some pretty solid economic data.
That's right.
The fastest GDP growth we have seen in the U.S. economy in almost 2 years. And she was really talking about the strength of that economy. It was interesting to hear her take on not just that, but also why it isn't being reflected in how people feel about the economy. This is something you and I talk about so often, Joe.
Sure.
The idea that all of the polls show that while people may feel good about their own personal financial situation, they don't feel good about the trajectory of the economy overall. And it was listening to hear kind of what she thought about that, the idea that there's a lot of issues that she seemed to be implying that they inherited, but also that a lot of the policy wins that she was touting under the Biden administration, it's starting to take hold now.
Yes,
it hasn't fully shown up yet.
Well, medium to long-term investments, these aren't ways to get reelected now, but that's been obviously the story from the administration. And speaking to the situation in Israel as well, this is clearly something the entire administration is focused on.
Absolutely. And she did say, first and foremost, I'm looking at this as a human and thinking about the humanitarian impact. What she suggested, though, was that right now it's not a huge economic issue, but not knowing how it's going to develop, obviously, depending on how that conflict and crisis unfolds, that's where you could see it being a more material issue for the global economy.
Well, I'll tell you, it was great to hear from the Treasury Secretary, and we'll have more on what she told us throughout the hour here on Sound On. We've got the first full day with the Speaker of the House.
I know.
Everyone's getting used to saying Speaker Johnson,
yes,
who's talking to the Biden administration today. It's on. They're working. Whether that leads to anything is another question.
Right.
Hakeem Jeffries today challenging him to take shutdown off the table, which I tend to doubt will happen.
Yeah, I guess we'll see. It does seem, though, that there is a different kind of tenor of the conversation around a continuing resolution.
Yeah.
Because back when Kevin McCarthy was Speaker, which feels like it was like a year ago now, he really struggled with getting a continuing resolution. He paid the consequences for doing so by getting fired from the job. And yet when Mike Johnson, the now Speaker, is saying, yeah, let's do a continuing resolution until, say, January 15th.
Yeah.
Doesn't seem like he's getting that much pushback on it.
We'll see how that goes and when the real debate begins. The supplemental budget request is what will break all of this open when they want to strip Ukraine from Israel, and we'll see how that goes. Then there's the former president, who in these wild times we've really only been talking about through the guise of the speaker race, but this is Donald Trump, who's been in court every day lately to talk about the value of his company or face off with Michael Cohen or whatever might be happening.
Yep.
Did you see he took the stand yesterday?
I did.
This is incredible. Now, we keep seeing him in the lobby, and people are asking questions about yesterday violating the gag order in this case in New York. Here he is.
Did you violate the gag order, Mr. President?
No. Were you referring to the clerk?
With respect to what? The disparaging comments.
No, not at all.
Who were you speaking about when you said the person sitting beside the judge? Okay, any other questions?
Any other questions? They're trying to figure out who was he talking about, who was he disparaging, because he goes in there and he just, he lobs spitballs at everybody and talks negatively about the judge, about the prosecutor. In this case, though, the judge issued a $10,000 fine for what is Donald Trump's second violation of a gag order in the civil fraud trial against him, New York State, and called him to the stand, asking him to talk about what he meant with these remarks, immediately told him he was not credible. Sit down, here's a $10,000 fine.
Yeah, and as you said, this is the second fine because last week he was fined $5,000 for violating this order.
This is incredible.
But we kind of knew, Joe, right, that this is the former president we are talking about. We know how open he usually is with his commentary. And when all of these either restricted gag orders or different judges doing different things. It was a question, how are you actually going to enforce that?
Right.
And I guess we're seeing it enforced in this case, but there's many others to consider as well.
Well, there are a lot of others, and that's why I can't believe we have Dave Ehrenberg in Washington and at the table with us. You've heard him, you've seen him on Zoom, and the Palm Beach County State Attorney is with us in person. What a treat. It's great to see you. Welcome to the Capitol.
It is great to be with you both. You guys are too good looking to be on radio.
Well, that's why they
we're
put
on
the
YouTube
cameras
now,
here,
too.
by God. Yes, we're doing everything with you today. It's great, and thanks for coming. My gosh, your thoughts on the gag order here? Will this be kind of a weekly, obviously $10,000 is not a matter for Donald Trump, but to be kind of spanked publicly by the judge like that is remarkable. He got up and left. He walked out before the session was over.
And nothing gets under Trump's skin like this case, whether it's a gag order from a judge he does not like, or for the valuation of Mar-a-Lago at between 18 and 28 million, which is really way below market value. It guts him to the core to have to see what's going on there. Even though this is not a criminal case, he will not be sent to jail for this case, but this one is personal for him. And as far as what the future punishments will be for him if he continues to violate the gag order, I think the judge will continue to fine him increasing amounts of money. It's $10,000 this time. Maybe the next time it'll be $50,000 and then on. But I do not expect this judge to sentence him to jail for contempt because, after all, it's a civil case, not a criminal one.
Right.
Well, and it is a civil case. So are we just going to see him stop showing up? He's not mandated to be there in the room, right?
Correct. Unlike a criminal case, he does not have to be there for this civil trial, but he has his own reasons. He wanted to glower at Michael Cohen. He really hates his former lawyer. He wants the optics of looking like he's the aggrieved individual here. He wants people in his party to believe that somehow he's entitled to a jury trial and the court wouldn't give it to him when it's really his own lawyer, Alina Habba, who forgot to check the right box, so he only has his own lawyers to blame. But nothing fuels MAGA like grievance and martyrdom. That's why he's showing up.
Wow. And just having a blast talking to cameras every day. But to be called to the stand like that, it was like, the troubled student called to the front of the class to be scolded. How often are we going to see that type of thing? The idea of Donald Trump ending up on the stand might suggest it's not always wise to show up when you don't have to.
That's right. He can end up in a perjury trap himself. And so it's not always a great idea. But look, lawyers can't control their own defendants, especially defendants, their clients like Donald Trump. Donald Trump wants to be there. He will be there. And he has other motivations. It's about the optics. He's the leading candidate for president, and he wants people to believe that I am aggrieved. I could be in Iowa right now, but I have to be here. When in reality, he was missing a golf match by being in court.
Excellent.
But it's all about show.
Yeah, well, we definitely know that for sure, that the former president does have a reputation for being quite a showman.
This is how every day.
This is how he operates. And as we were just alluding to, this is just one case that he is facing, and it's a civil case. He's facing a multitude of criminal cases as well. And the one I think that has been the most interesting over the course of the last several weeks is Georgia, the racketeering case. Yeah. There's now been, 4 plea deals?
Some high profile
including
ones.
Jenna Ellis, Sidney
Meadows.
Powell, Mark Meadows.
Scott Hall.
Do you think this is just dominoes that are going to fall one by one? How do you think this is going to play out?
I think there'll be more defendants copying the plea. They're going to get FOMO, these other defendants. Fear of missing out.
And there's 14 others here that we are considering?
Yeah, look at this. If you're on YouTube, you can see all the mugshots.
Look at that.
We've got them in 2 different columns now.
Yeah, see,
Plead guilty. Plead not guilty.
All those folks on the right, they all have FOMO. They are worrying that the longer they wait, the worse the deal will get. Right now, the folks on the left, if you're on YouTube, you can see the 4 of them.
Yeah.
They got plea deals with no jail time. They were facing years in prison, but first one in is the first to win. That's something defense lawyers like to say. If you get in first, the prosecutor's door, you get the best deal. But that door is closing soon. And I anticipate that future plea deals, maybe not yet, but pretty soon they'll start including incarceration.
Wow. What do you make of the Meadows deal specifically, as compelled as I am to talk about Sidney Powell at any turn? The idea here, and we've heard a lot of people suggest this, including Chris Christie yesterday, of course, a former prosecutor, you don't just cut a deal with the chief of staff who was clearly involved in this and may well deserve to be punished for his role that he played unless he's really got some important information. Was that the deal that closes the walls in on Donald Trump?
Well, we don't know, Joe, whether Mark Meadows cut a deal with prosecutors other than receiving immunity to testify before the grand jury. So apparently he spoke to Jack Smith's team 3 separate times this year and testified before the grand jury. You cannot force someone to self-incriminate unless you give them immunity at the grand jury. That's what happens. So they call him before the grand jury. They say, hey, we're going to give you immunity, and then he testifies truthfully. But as far as whether he entered into a non-prosecution deal where I will be a cooperating witness in return for your not prosecuting me, that's not clear. It'd be up to ultimately Jack Smith and Mark Meadows whether it goes that far. But for right now, I'm just thinking he just testified before the grand jury, got immunity for his testimony, and I can't extrapolate beyond that.
That's really something, and we should clarify that is the January 6th case here in Washington. And I'm actually curious, the Sidney Powells and the others you mentioned in Georgia, Kaylee, are they also talking to Jack Smith at the same time?
There's no indication that Sidney Powell is talking to Jack Smith, but it looks like Mark Meadows' people wanted us to know that he was talking to the grand jury, to Jack Smith, for whatever reason. Now, what's interesting is, how does Fani Willis take this? Fani Willis has got to be concerned that she really should not try to use the information that Mark Meadows gave to Jack Smith under immunity against him in the state case, because then there are some complex issues of whether state prosecutors can feed off of the information where he was granted immunity. There was an Oliver North case. You remember that guy?
Of course.
He was ultimately cleared, or at least found, the case was thrown out against him because of those types of issues. So prosecutors are very careful. So I think what's going to happen is she's going to continue to go after Mark Meadows, who is an indicted individual in Fulton County, based on the evidence she accumulates, not on the evidence that Jack Smith gives her.
But overall, Mark Meadows aside, with the other plea deals that have now been entered, her job is getting easier, not harder, generally, right?
It is definitely getting easier when you have a number of your co-defendants flip, because 19 co-defendants, that's very difficult. And in a RICO case that takes months to try, what was going to happen is you had 2 people, Cheesebro and Sidney Powell, who requested speedy trial. They were going to be tried first. They were going to give Donald Trump a dress rehearsal. They were going to expose the state's arguments. It was to Donald Trump's benefit. But now they're out of the way. So not only does Donald Trump not get to see an advance copy of the prosecution, he also could be tried before the election. Had the others been tried first, it would have pushed his case beyond the election, but now there's no one to wait for.
That's incredible. And something that we have to remember with, as we juggle for indictments. With all of that said, you consider his life over the next year as he's running for president. You made the point, hey, I wish I could be in Iowa, but I'm here in court. On some days, that might actually be true, and his campaign will need him to be in certain places. How much flexibility will he have to actually run for president while he's managing all these?
That's a really good question, because we don't know the schedule yet. I do believe the case that will happen before the election is the case in D.C. that we've been discussing. Judge Chutkan, she's not fooling around. And that case from Jack Smith is built for speed. There are no other co-defendants. There are unindicted ones, but not indicted ones. There are only 4 counts against Trump because Jack Smith wants that to happen before the election.
That's right.
And I think it will. So can he campaign fully while being put on trial? I don't know, but I don't think, or I'm not certain that the other cases will happen before the election. I think because of the plea deals, now it's a better chance the Fulton County one happens before the election. But I think the strongest case against Trump is the one in my neck of the woods.
The documents case.
The documents case. They got them dead to rights there. But you got Judge Cannon, who's not quite Judge Chutkan. She's new, and she is slow walking this thing. And I think that case is going to get pushed beyond the election.
And if we're saying then beyond the election, he very well could be president at that time, right? So how would does that mean that this case just never gets tried? I feel like that's where we get into really murky waters. Are you now having a sitting president of the United States on trial?
Oh, I don't think it's murky for him at all. I think that's his only defense, that he has no defense to the documents case. They got him. His only defense is become president and then order his Department of Justice to drop the case. That's what he'll do, and the case goes bye-bye. The trickier one is what happens if he's convicted in Atlanta or in New York, which also could happen before the election.
He can't pardon himself in the state case.
He can't pardon himself. You know what will happen? So if he becomes president and he's convicted, or they keep trying to prosecute him, he'll say, okay, New York, okay, Georgia, I'm surrounded by my Secret Service here in the Oval Office. Come and get me. Yeah. Wow. It'll be a constitutional crisis.
I knew he was going to say that.
The reality show continues. Is it wrong? I'm admiring the lapel pin, the badge. I don't know if people can see that. Probably not on YouTube. I mean, is it wrong that I want one of those? Does that make me a Herschel Walker? Is that like a state attorney's? How do you get that?
You can't get this in a costume store. You've got to get elected state attorney to get one of these things.
That's so cool.
Now, here's the insider tip. We exchange them with each other. So this is actually someone else's GA pin.
Tell me it's Fonnie Willis's.
This is Tim Cruz from Massachusetts. Looking at you, my friend.
Wow, no kidding. All right.
Republican.
Salute to Massachusetts. I love that. Dave Ehrenberg, what a treat to have you in Washington. Get home safe. Good luck here in the Capitol. I'm Joe Matthew with Kaylee Lines. We'll get to the speaker next. This is Bloomberg.
Profits. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. A down Thursday. We're off session lows, but we're still looking at a 0.9% drop in the S&P 500 index, down 37 points right now with the S&P at 4149. The Dow is down 133, lower by 0.4%. The Nasdaq Composite Index down 196, a drop now of 1.5%. 10-year yield 4.83% with a 2-year that's now yielding 5.04%. Spot gold up 0.3%, 19.85 the ounce, and West Texas Intermediate crude oil is down 2.4%, 83.32 for a barrel of WTI. Around hit big tech set the stock market toward its lowest since May after another round of disappointing earnings. Meta Platforms trading lower now by 3.7%. After the bell today, we'll be hearing from Amazon.com. Treasury Secretary Janet Yellen says yields reflect a strong economy and higher for longer interest rates in a wide-ranging interview this afternoon with Bloomberg Radio in Washington. She also talked about the economy and this morning's GDP report.
It's a good, strong number, and it shows an economy that's doing very well. Let's remember it is just one quarter's number, and I'm not expecting growth at that pace to continue, but we do have good, solid growth. Probably the year will come in close to 2.5. I wouldn't be surprised if we see that.
That report showed the U.S. economy expanded at the fastest pace in nearly 2 years. Byron Wien, the longtime market strategist whose annual list of 10 surprises made him one of the most influential voices on Wall Street during a career at Blackstone and Morgan Stanley, has died. Byron Wien, dead at the age of 90. Recapping stocks lower, S&P down 35, drop there of 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
First full day on the job for Speaker Mike Johnson. Go ahead, you can Google it. You've still got time. I think within the first 24 hours, that's still safe for everybody. We talked, Kaylee, with Steny Hoyer on Balance of Power late yesterday. I asked him if he Googled it. He said no, but the staff did work up a sheet for me.
Yeah.
Not everybody even knew who he was before he actually won the gavel.
Yeah, I think most people had to do a little bit of digging for information because this guy was not high profile.
Right.
From backbencher to speaker is basically how this went. But maybe that's the only kind of person that could have got the job. I think that's really what we learned.
He was kind of in the leadership, but...
Backbench of leadership.
That's true, yeah.
This is not the starting lineup.
This whole thing, though, by the way, and he says, this is about trust and teamwork, and we're going to do this right. We're going to govern well. He was backed by everyone else who wanted the job yesterday. They came out on the steps. You were up there yesterday. Steve Scalise, God, we learned so much. You're going to fix Washington. People don't get it on the outside. They think it's all about chaos. Tom Emmer, this is the best time we ever had. This is the best thing.
From an outside point of view, these last few weeks probably look like total chaos, confusion, no end in sight. But from my perspective, this is one of the greatest experiences in recent history in the recent history of our republic.
Okay.
I wonder if he's talking about the 3 weeks as a whole minus 4 hours and 10 minutes when he was the speaker designate.
Yeah, I don't feel like that went really well for him.
Yeah,
maybe
I don't
Mike
think
Dorning
so.
feels differently. That's just the way they would have planned it, Mike, right?
Oh, yeah, sure.
This is the greatest experience, he said, in modern democracy.
Exactly the way they would have planned it. Now, obviously, like each one of these guys...
Are they sore?
I think they're all sore, but some of them do a better job of hiding it than others.
Okay.
I'm not sure Emmer sort of was planning on becoming speaker anyway. By that point, you're getting to people who weren't really planning on it. But I think Scalise and Jordan probably were. They're just going to have to suffer in silence probably. But once you have a speaker and your party, you have to make that effort to unify together, and they'll never be so unified as they are right after they choose them before they actually have to vote on anything.
Yeah, well, got 220 votes.
Yes.
No one else could even get really close to that.
Mm-hmm.
So clearly they were unified yesterday, but to your exact point, how unified will they be tomorrow? How much more ununified, perhaps, will they get with each and every day that passes as we get closer to November 17th and trying to figure out what government funding is going to look like?
You have to realize fundamentally the Republican Party has fractured. And they call them the five families in the House with a nod to the New York Mafia. I sort of think of them as three groups. There's the Trumpy populist wing, there's the establishment conservatives, and there's the moderates in Biden districts. And they're almost three different parties, and it's hard for them to agree on things. And then you have something come up like, how are you going to fund the government? That's just going to crack it all apart again. And now you've got all these hard feelings, personal grudges from this chaotic 3 weeks.
I don't know what you mean by that, Mike Dorning. I think this five families thing is actually becoming more true with time. But take a look at this story that we have on the terminal here. New House Speaker invokes evangelical faith in conservative turn. There are a lot of questions about what his approach is going to bring to the relationship with the White House and inside the Republican conference. Everyone's passing around this photo today from in January when he was on his knees praying with some of the other leaders in the well of the House chamber. But listen to Speaker Johnson's, I have to get used to saying that still, response to the shootings that we haven't mentioned yet in Maine. It's important the way that he addressed this, and I suspect that we'll be hearing a lot more about it. Here he is earlier in the hallway outside of his new office.
This is a dark time in America. We have a lot of problems, and we're really, really hopeful and prayerful. Prayer is appropriate in a time like this, that the evil can end and this senseless violence can stop. And so that's the statement this morning on behalf of the entire House of Representatives. Everyone wants this to end, and I'll leave it there.
And he did not answer any questions as he walked away. The thoughts and prayers has become a meme, like in the wrong sense of the term, right? So his solution is to pray. Is that going to work for voters?
That's not going to work in the long term for voters, for sure. That has been sort of reflexively the Republican position on gun violence, since they don't want to talk about potentially regulating guns. And of course, whenever anyone has a painful experience, we all, if we're religious, we want to say we want to offer our prayers. And if we're not religious, we want to say we offer them our thoughts.
Sure, of course.
So while it's sort of an appropriate, mournful response, it's not a public policy response to the problem. And in the long run, that doesn't wash with centrist voters.
Yes, right.
With people who are very concerned about gun rights, that'll be fine.
Yeah, but of course, as he's talking about prayers in this context, he also, to your point, Joe, was kind of very open with the religious tie-ins when he was just speaking on the House floor after just winning the election to be speaker. He kind of was bringing that into his commentary.
Yeah. God brought us here to this moment.
Exactly. And it just speaks to this idea, Mike, that this is a staunch conservative, a fiscal, social conservative as well. And we talked so much when Jim Jordan was making the attempted speaker at how much this would cement the party further to the right than it was. Do we know how the spectrum has moved under now a Speaker Johnson? Where does he fall in this? Given Jim Jordan is such a well-known firebrand, if you will, just because he's less well-known doesn't mean they might not align on a lot of things.
Yeah, I'd say two things there. One, on the sort of religious nature, we do have plenty of people on the progressive side, and even the current president, who's kind of a moderate progressive, tends to invoke religion a lot. Sure. I think probably in all cases, sincerely so. In terms of the contrast with Jim Jordan, they're both actually very conservative on cultural issues as well as economic issues. And what, in my mind, distinguishes Jordan from the other people who invoke religion is that he has a firm religious belief for cultural conservative issues and he has spent a good part of his life advocating in the courts for legal advocacy groups for the Christian right. So one would imagine that these are sincerely held views, and that now that he's the Speaker of the House, he would try to advance them. That said, you can have someone who's quite ideological and still practical. Nancy Pelosi is someone who was actually the most progressive Speaker of the House in modern times in terms of her personal views, but extremely pragmatic and willing to go where, the center of gravity was.
Are we taking a shutdown off the table? That's what Hakeem Jeffries is asking him.
I don't think we know that. I think that it's less likely now that there will be a shutdown in mid-November, but not necessarily less likely that there will be a shutdown soon. Now, Mike Johnson said even before he was Speaker, when he was running for Speaker, he told fellow Republican lawmakers that he would like to get temporary funding to get us past that mid-November deadline, and so that you could have the showdown in January or April. And that's actually a very sensible, practical approach, because you can get your ducks in a row and figure out where you are. That said, there are conservatives who want tougher demands even for that mid-November temporary funding.
And you're still going to have to reconcile all these things with the Senate.
Oh, boy, I can't wait. The holidays are going to be great this year in Washington as we work through them. Mike Dorning, thank you. I didn't say that out loud. Bloomberg politics reporter with us here again on Sound On. I'm Joe Matthew with Kaylee Lyons. We haven't heard from Nancy Lyons in a bit. Let's get up to date on world and national news from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The White House is ordering flags to be flown at half-staff following the shootings overnight in Lewiston, Maine. Maine Governor Janet Mills says the death toll is climbing.
I'm profoundly saddened to stand before you today to report that 18 people lost their lives and 13 people injured in last night's attacks.
Mills says the suspect has been identified as 40-year-old Robert Card, who remains at large. Authorities are warning residents to stay inside, contact 911 if they see anything specific. And we're also hearing terrifying accounts from survivors. Brandon was at the bowling alley when the shots rang out.
I just booked it down the lane, and I slid basically into where the pins are and climbed up in the machine and was on top of the machines for about 10 minutes until the cops got there.
The shooter also fired on people at a local bar. The new House Speaker, Mike Johnson, has a long list of priorities and little time to achieve them. Bloomberg Government's Jack Fitzpatrick says he's expected to have a very short honeymoon period.
He's going to be very aggressive on trying to get the rest of the government funding bills done, if it's possible to do something by November 17th. But he's already acknowledged that may not be possible. And he's already kind of pitched members on the possibility that they will need a months-long stopgap measure to give him time.
Again, Bloomberg Government's Jack Fitzpatrick. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
Profits. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, and NASDAQ off session lows, but still a lot of red on the screen. Right to the numbers with the S&P 500 index now at 4155. We're looking at a drop now of 32 points, down by about 0.8%. Dow Industrials down 109, decline right now of 0.3%. The NASDAQ Composite Index is down 171 points, a drop now of 1.1%. 10-year yield 4.84%. We have got the 2-year now yielding 5.03%. Spot gold up $6 the ounce to $19.85, up 0.3%. While West Texas Intermediate crude is down 2.7%, 83.12 a barrel on WTI. A rout in big tech has sent the stock market toward its lowest close since May after another round of disappointing earnings. Case in point, Meta last night. That stock now down by 3.1%. After the close of trading today, we will be hearing from Amazon.com. Amazon shares now lower by 1.1%. Also reporting today, we'll be hearing from Intel. Morgan Stanley's incoming CEO, Ted Pick, says investment banking will lead the next business cycle and that hiring for that business will help the firm compete with rivals. Pick appeared alongside outgoing Morgan Stanley CEO James Gorman for an interview with Bloomberg's Sonali Basak, where Gorman talked about the company's outlook and its business strategy.
When we set about on this journey, we weren't focused on a quarter. And if the stock takes a dip in a quarter, I say that's kind of good news because we're buying back stock. And every share you buy back, you're retiring a dividend. So shareholders who hang tough are getting a 4.5% yield, and we're buying back stock, and the stock's cheap. So it's kind of a good situation to be. But medium term, no, I think the firm is going to do great.
And you can hear more of that conversation with James Gorman on the Talks podcast. You can download it wherever you get your podcasts. Morgan Stanley shares on a down day for the rest of the market. Morgan Stanley up now by 1.5%. Again, Amazon, Intel after the close of trading. Spot gold right now up $6.50 the ounce, up 0.3%. West Texas Intermediate crude down 2.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
Live from Washington, where we'll have a special conversation coming up in just about 10 minutes' time with Paul Beckett from the Wall Street Journal. Kaylee, it's not often Bloomberg talks to the Wall Street Journal, but it's an important day today on what is Evan Gershkovich's birthday. And of course, he is marking that in a Russian prison. Paul's working overtime to try to secure his release. He's going to join us a little bit later. I'm looking forward to it.
Yeah, likewise.
The headline on the UAW is remarkable. I don't know if we can talk about this, actually, because we were at the correspondence dinner last evening, the radio TV correspondence dinner.
Yeah.
And we were graced with the presence of Haley Stevens, the congresswoman from Michigan, along with a number of great guests of Bloomberg. And when the news broke that Ford had agreed to elements of a new contract with the UAW, it was a big moment for the congresswoman from Michigan. So we had a bit of a heads up on this. And it's a pretty big deal for what could lead to a resolution in this historic auto workers strike.
Yeah, well, at least for one of the big three.
That's true. Again, it's Ford we're talking about.
Yeah.
I'll tell you, Sean Fain has a way with words, doesn't he?
Yeah.
The head of the UAW.
Very
Spoke about
vocal.
it last evening. Was this a Facebook Live? Is that where this came from, James?
Producer
he owns
James
Facebook.
says
Yeah. Did he have the white camo on? Oh, red polo. Sean Fain.
So we took our strike to a new phase and hit the companies with maximum effect. On Monday, we called on our UAW family at Sterling Heights Assembly to stand up. That is Stellantis' biggest and most profitable plant. On Tuesday, our UAW family at Arlington Assembly answered the call, and they went out on strike, shutting down GM's biggest and most profitable plant. Ford knew what was coming for them on Wednesday if we didn't get a deal. That was checkmate.
calculated.
Do you think he must love writing this stuff, right?
Oh, I'm sure. And he must love what he was able to negotiate.
Absolutely.
Bloomberg had been reporting 25% wage increase. That's what the union was looking for. And guess what they got from Ford?
To the penny. Great reporting, by the way, on behalf of Bloomberg and the whole team. That includes Keith Naughton, Bloomberg's auto reporter, joins us now with a little bit more on this. Keith, great job and great reporting. It's checkmate, as we heard from Sean Fain. What does it mean for the greater strike here? As I asked earlier, does it unlock further breakthroughs?
Yeah, I mean, they are working very hard at the GM and Stellantis tables today. Sean Fain was at GM this morning, and he's at Stellantis this afternoon, meeting with the top leaders of those two companies. So it certainly seems like talks have accelerated at those two. Part of that is motivated by the fact that the UAW sent the Ford workers back to the job. 4 years ago, when the UAW struck GM, they waited until the contract had been ratified by the workers, which takes a matter of weeks before they sent them back in the plants. But they put them back to work right away at Ford to put pressure on GM and Stellantis to settle.
Well, and it'll be interesting to see if GM and Stellantis ultimately do match what Ford offered the union on the wage front. As I said, 25% increase. But we know that so much of this negotiation wasn't just about the wages, Keith. What do we know about other elements potentially of this deal?
Yeah, I mean, a lot of it had to do with the different tiers of workers they had and the temporary workers that they use. So the tiers of workers have gone away. The newest workers are actually getting the biggest raises to bring them closer to the top wage. And temporary workers are being converted to full-time so they can get into this progression to the top wage, which is now going to be over $40 an hour. When you put the 25% together with the cost of living allowance that also has been restored for the first time since 2009, you actually get the top wage going up 33%. To get to that now, it takes 3 years. It previously took 8 years.
We're talking a lot about wages here. Keith, what about pensions? What about retirement benefits the union was demanding?
Right. They've improved the multiplier, improved the contribution. They have not gone back to the traditional defined pensions. That's not happening. Yeah. So that is not one that the UAW won. They also, by the way, did not get the 32-hour work week that they were after, the 4-day work week. They'll still be working 5 days a week.
Just like the rest of us.
What is that? I thought maybe we could leverage that for something around here.
Right, I was hoping they would set an example. No. Keith, to go back to how this is going to affect the other automakers, we obviously had GM earnings earlier this week, and Mary Barra was seemingly pretty stringent on what she was and was not going to accept. This letter to shareholders talking about how she has to retain 8 to 10% adjusted profit margin in North America, how she's not going to do anything that ultimately sacrifices the profitability of the company to the point where they aren't going to be able to invest and it becomes a job security question. Do you feel like GM might be the last one to break here?
I don't know about that. Both GM and Stellantis have raised a lot of objections over cost, but Ford did too. When Ford offered the 23% raise, they said they were at their limit and couldn't go any higher, and here we are.
Here we are, indeed. Keith Naughton, many thanks for the insights and great reporting. Bloomberg auto reporter with us here on Bloomberg Sound On. Sean Fain talking to the membership and remembering that he's an elected leader of the UAW. I'd love to see a poll among membership and what they think of him right now. Listen to him again on the Facebook Live.
For months, we've said that record profits mean record contracts. And UAW family, our stand-up strike has delivered. What started at 3 plants at midnight on September 15th has become a national movement. We knew we were getting close, but we also knew the companies needed a major push if we were going to make sure we got every penny possible in this agreement.
There you have it from the director of the UAW. I'm Joe Matthew in Washington, along with Kaylee Lines. We'll bring in Paul Beckett next for the conversation we were talking about on Evan Gershkovich's 32nd birthday coming up next. After we get up to date on trading, let's get to New York. It's been a while since we've heard from Charlie Pellet. How's it looking, Charlie?
We are red across the screen here, Joe Matthew. The Dow, the S&P, NASDAQ, all trading lower, including the automakers you were just discussing. Case in point, Ford down 0.5%. GM also down 0.4%. Stellantis, parent of Jeep and Chrysler, that is down 1.6%. And Tesla tumbling now by 2%. Tough day for a lot of big tech names. We've got NASDAQ down 148, down 1.2%. S&P down 27, decline there of 0.6%. The Dow down 83, lower now by 0.3%. A rout in big tech has sent the stock market toward its lowest close since May after another round of disappointing earnings. Case in point, Meta Platforms down now by 3.2%. After the close of trading today, we'll be hearing from both Intel and Amazon. 10-year yield 4.84% with a 2-year 5.04%. Spot gold up $6.50 the ounce to $19.86, and West Texas Intermediate crude down 2.6%, $83.17 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you. I'm Joe Matthew in Washington. As we head for Bloomberg Business Week, we want to bring you an important conversation with Paul Beckett. You might have heard him a couple of months ago join us on Bloomberg as the bureau chief of the Wall Street Journal here in Washington, D.C. And Kaylee, as I said earlier, it's not too often that you see Bloomberg and the WSJ making news together here, but it's important because he's not actually the bureau chief, at least not at the moment, in Washington. He's become assistant editor of the journal dedicated to the efforts to secure Evan Gershkovich's release. And it's Evan's birthday.
Yep.
32 years old. His 211th day of incarceration, as I read in the Wall Street Journal. And it's always an honor to bring Paul back on the air. It's good to see you, and thanks for coming across town to say hello to us. If you're with us on YouTube, you see Paul's pin that says Free Evan that I suspect you're wearing everywhere right now. And I just wonder if you could give us an update on his situation, what you're hearing from him, when the last time you spoke.
Thank you so much. He is in decent shape, but in decent shape in a Russian prison where he's been for 211 days, as you mentioned. He spends a great deal of that time in isolation. He's given 1 hour in the prison yard each day. He's working very hard to keep himself in shape, both mentally and physically. But we really just see this sort of stretching on far too long, and we hope that everything can be done to bring him home.
Yeah.
What's his degree of optimism and your degree of optimism that his incarceration there is going to end anytime soon?
This will end with the negotiation between the U.S. government and the Russian government. So we would just like to see more action taken. At the moment, his pretrial detention will last until November 30th. They have 12 months to keep extending that detention, so that would put us into the spring of next year. But it's so opaque, we don't even really know when he'll go to trial and what happens after that. So it's very murky, and that's the dispiriting part.
So is this a diplomatic solution, a prisoner swap, or is it actually, in fact, a legal resolution that you're hoping for?
One of the ways it will happen, and probably the most likely, given what has happened in the past, is through a prisoner swap. Mm-hmm. He has been accused of very serious espionage charges, which we, of course, will say to the end of the earth are completely false. But he will probably, according to the Russian statements so far, have to go through that trial before the meaningful negotiations can take place. We hope to circuit that process, but in the mists ahead, that's about all we can see.
So you suggested you would like to see the U.S. doing more here to push this. What kind of conversations are you having with the Biden administration, with those in government who may be able to help push this case? How committed do they seem to Evan's cause?
President Biden met with Evan's family at the White House Correspondents Association dinner and made a promise there to bring Evan home. So that's something that they have been relying on, that we have been relying on for action. We can't see everything, obviously, that the government is doing. Their public statements have been encouraging that this is a top priority, but we just want to make sure that it remains that.
Boy. Can you describe the conditions that he's in now? We spoke last time about the facility that he was staying in. Is he still there? Is he around other people, or is he isolated?
He's in the Lefortovo prison, maximum security services prison in Moscow. We think he's in okay shape. We have lawyers that go in to see him once a week. He's had a few visits from the U.S. ambassador to Moscow. So from what we can tell, it is okay. He's reading, he's meditating, he's exercising when he can, but it's a lot of work and the circumstances are awful.
I'm sure. Is there anything that the Journal is doing as well for those journalists who are not currently incarcerated in Russia but still have to do the kind of work that Evan was doing and that he is now being essentially punished for? What do you do to make sure that others don't end up in the position he is currently in?
Well, we are actually trying to be helpful in a position of another reporter who is in a similar circumstance. Alsu Kurmasheva from Radio Free Europe, Radio Liberty was detained in Russia recently. So the extent that our experience can be helpful to them, then of course we're more than happy to engage on that. I think overall what you're seeing is a real stifling of what little free press or independent press there was in Russia. So many reporters now have to cover Russia from outside, from Warsaw, from Berlin, from Dubai, from wherever they can, and it's just not the same.
We're spending time with Paul Beckett from the Wall Street Journal, who is working to secure Evan Gershkovich's release. As people consider what he's going through right now, and more broadly what journalists are facing on a daily basis here, we've got journalists in very dangerous places, and it could get a lot more dangerous, for instance, in the Middle East. Does it change policies at the Journal and the way that you look at deploying reporters around the world?
We've always, as I'm sure Bloomberg has, put the safety of our reporters first.
Absolutely.
In spite of having very strict protocols, bad things will happen, and that to some degree is the nature of the business. You do see a increase in violence towards harassment of and targeting of journalists around the world. We've seen it recently in the Middle East with Issam Abdallah, the Reuters reporter in Lebanon, who was monitoring a live feed, and he was killed and several other reporters were injured when that location was hit by a missile. So it is very dangerous days for reporters out there, and I think sometimes the press can be an easy punching bag. I think it's a moment to reflect on how many people do extraordinary things to bring us the news.
Producer Matt reminds us, Kaylee, 34 journalists killed in the line of duty this year so far, this calendar year. 510 journalists are detained as we speak.
And Evan, of course, is one of them. Obviously, I know communication, reaching him in a communicative way, is probably immensely difficult. But if you had one message for him on what is, again, his 32nd birthday, could you share that for us?
We're doing everything we can to make sure he doesn't spend his 33rd birthday in jail.
Yeah. How often, if at all, does the Journal, does his employer get to speak with him, or is it through his lawyers on that weekly basis that you referenced?
That's the chief point of contact. We have letters go in and out. His family writes him letters. His colleagues write him letters. And in those letters, they try and fill him in on what he's missed in the world. I think that's the messages that he wants to hear. He's a huge Arsenal FC fan. He wants to hear how they're doing. His sister sends him celebrity gossip to keep him up to speed. Anything that will buoy his spirits during such a difficult time. And his strength there is an inspiration to all of us, to be honest.
Well, I want you to know how much we respect the role that you've taken on there. You were the Washington bureau chief, which is a very proud position, and the fact that you're doing this full time to secure his release is honorable, and we thank you for what you're doing. There's not a lot that we can do here, I think, Kaylee, other than keep talking about this and keep reporting on it. And Paul, that's the pledge that we'll make to you. So stay in touch with us.
Greatly appreciate it. Thank you both so much.
Absolutely.
Thank you for the
Paul
interest.
Beckett from the Wall Street Journal with us here on an important conversation on the 32nd birthday of Evan Gershkovich. I'm Joe Matthew in Washington, along with Kaylee Lyons. Thank you so much for spending time with us on the radio, on the satellite, and on YouTube. We certainly learned a lot today, as always, Kaylee, and we'll be back with one more of these. Tell me it's real. Tomorrow is Friday.
Home stretch, Joe.
Not a working weekend, right? We got a speaker. We got some things worked out.
Well, don't jinx it now.
Oh, fine. Fair enough. With Kaylee, I'm Joe. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. We are live once again in Philadelphia, Schwab Impact 2023. Carol Master along with Tim Stanovic. It's Thursday.
It's Thursday, Friday's Eve. Good afternoon, Carol.
Good afternoon.
Thank you.
There's a lot going on. We got a hot economy.
Yeah, U.S. yields are dropping. What's going on there?
I don't understand. Wait. Hot economy, yields dropping. This is a great backdrop for so many of the conversations we're going to have today, because as we reminded you yesterday, here we are at this event, so many investment professionals trying to figure out how best to manage their client money going forward. So good backdrop for us.
Yeah, we've got some great market voices, some great macroeconomic voices who are going to be joining us in Philadelphia to help make sense of it all. Speaking of making sense about what comes next, we've got a duo of CEOs at the top of the show.
CEOs from Whirlpool and Mattel. Whirlpool, Mark Bitzer is going to be with us. We're going to talk about what's going on in their business. North America is their biggest economy, biggest data point, if you will, on the revenue line. So we're going to talk about the U.S. consumer. And then Ynon Kreiz of Mattel is back with us. He's an Israeli-American. And so, we're going to talk Barbie. We're going to talk about the outlook. We're going to talk about why investors are sending stock of his company down so much. But we're also going to talk about the conflict in the Middle East and see what he has to say about it.
Shares of Whirlpool down 14.6% right now. Shares of Mattel down close to 7%.
Yeah.
We're also going to have some market views with the Schwab team. We got Jeff Kleintop, Chief Global Investment Strategist, joining us a little bit later. And Kevin Gordon will be here, Senior Investment Strategist, both joining us to talk markets and macroeconomic outlook.
Yeah, David Bott said he's the head of equity product management over at Schwab Asset Management. He's going to talk about millennials, and fixed income.
That sounds good. I'm a millennial. I like to talk about fixed income. I'm an elder millennial, Carol. So we'll see if I count.
He is an elder millennial.
Some people call them geriatric millennials.
All right, Chloe Berry's going to be with us, head of the infrastructure income strategy at Brookfield Asset Management. Infrastructure, real estate, private lending, hot topics, certainly in this environment in 2023. So I'm looking forward to that conversation.
All right. Well, speaking of hot topics, we got earnings from Amazon, Intel, Ford, and Chipotle after the close. So that's in just about an hour. We're going to have a slew of those come across the wire. We're going to give you those updates when we get them.
And what you need to know about SBF taking the stand today. We're talking about Sam Bankman-Fried. All right. Lots coming, folks. Don't go anywhere. But right now we want to get a check on the day's trading and some of the top business stories. Here is Charlie Pellet.
Thank you very much. Lower across the board, well off session lows. Lots of moving parts. We're going to be discussing them right here on Bloomberg Business Week. GDP, the ECB, after the bell, as you mentioned, Amazon and Intel, among many, many others. A rout in big tech has sent the stock market toward its lowest since May after another round of disappointing earnings. Meta Platforms, case in point, that stock now trading lower by 2.6%. S&P down 17, drop there of 0.4%. The Dow lower now by 24 points. We're off session lows, down by about 0.1%. The Nasdaq Composite Index down now by about 0.9%, lower by 113 points. 10-year yield 4.84%, with a 2-year that's yielding 5.04%. Spot gold up $7 the ounce to $19.86, up by about 0.4%. And West Texas Intermediate crude down $2 the barrel to 83.35, now a drop there of 2.4%. The European Central Bank this morning left interest rates unchanged for the first time in more than a year as it gauges whether an unprecedented series of hikes will succeed in subduing inflation. Here's ECB President Christine Lagarde.
The Governing Council today decided to keep the 3 key ECB interest rates unchanged. The incoming information has broadly confirmed our previous assessment of the medium-term inflation outlook. Inflation is still expected to stay too high for too long.
And next week, the Federal Reserve will issue its interest rate decision, and policymakers are likely to hold rates steady. Again, we've got the 10-year now yielding 4.84%. S&P down 18, making up a lot of earlier lost ground, down now by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Whirlpool and I have spent the last 75 years becoming laundry experts, but now they're making it easy for everybody. I'm making your world a little easier. Whirlpool.
All Boy, who doesn't love a vintage commercial? Whirlpool, of course, and they are front and center today. We're watching the share price down about 14% here. What we love about these kinds of companies is they can tell us so much about what's going on, certainly in the minds of the U.S. consumer and what's going on in the U.S. economy. And this is a great conversation, especially, Tim, if you think about it, on a day where we got GDP, we expected it to be hot, and it came in even hotter than expected.
In fact, Treasury Secretary Janet Yellen, just in the last couple of hours, telling Bloomberg exclusively that the surge that we're seeing in longer-term bond yields in recent months, that's a reflection of the strong U.S. economy, not of a jump in government borrowing driven by that widening fiscal deficit.
All right, so good to know. And that GDP report for the third quarter, it was fueled by a surge in consumer spending. So let's get to our guest, Whirlpool Corporation, Mark Bitzer. He is with us. He is chairman, he is president and CEO of Whirlpool, and he joins us on Zoom from Benton Harbor, Michigan. Mark, it is good to have you back with us. Your company, you came out and you trimmed your full-year profit outlook amid an uptick in promotions. Investors noticed, and the stock is down the most and to the lowest since 2020. So investors definitely, are upset about what they heard from you guys. First of all, let's take the big picture. What's it like operating in today's environment right now?
Yeah, first of all, Carol and Tim, thanks for having me back on the show. I mean, what we basically communicate today is a third quarter, which I would still describe as pretty solid results. That year over year, we grew our business. We hadn't grown our business for 6 quarters in a row, and now we grew our business more than 3% revenue growth. We expanded market share, and year over year, we expanded our margin by about 100 basis points. But yes, we trimmed our forecast, technically not on the ongoing EPS because we also had some tax benefits, but we, as opposed to 7.725% EBIT margin, we lowered it to 6.25% to 6.5%. So that is trimming the EBIT margin, and the market reacted. You could, in many ways, argue probably overreacted, but it is what it is. But I think that's essentially what happened. The underlying results, which we had, I would still consider very solid, in particular compared to the pre-COVID levels, and also compared to Q2, where we essentially went sideways. But in all transparency, we expected our margins to continue to improve, and instead of that, we basically moved sideways. And I think that's what we see today, a lot of reactions out there. Underneath that, and that's probably getting to your broader question about the consumer. The consumer right now in our industry, we see strong replacement demand, i.e. when products break down and you have more appliance usage post-COVID. But the discretionary side of a consumer, which is so much driven by consumer confidence, that is the soft part of the business. That is also the inherently more attractive part of a business because it typically comes with higher margins and higher mix. So we see right now a pretty heavy shift of consumer spending towards the replacement side and lesser to a big discretionary purchase.
That's interesting, and that makes sense given what else we're hearing with the economy, Mark. Where else are you seeing when it comes to the consumer in the U.S., weakness when it comes to consumer spending? Is there certain categories that you can outline for us where you're seeing weakness? Are there geographies? Is it the higher-end consumer that's actually struggling more than a consumer, in the middle or lower end? Tell us what you're learning and what you're seeing.
Yeah, and again, it comes back to my early comment about replacement demand. A replacement demand, just put yourself in consumer shoes. If you have a washer or refrigerator breaking down, you want to have it replaced with 2 days. You don't do the big shopping around and the mix-up. You want to replace. So that is just a one-on-one sale, which, again, is typically not a very mix or margin-attractive business. The discretionary side, where people plan for a new kitchen or remodel a house, is the soft part right now. And that's the much richer part of that. So in general terms, you could say, yeah, there's a little bit of a trading down on the consumer landscape. There is a segment of, call it the premium consumer, which is pretty resilient, but it's kind of a big mass in between where you just don't see trading up. If at all, right now, you just see more trading down, coupled with, a promotional environment, which we described as return back to pre-COVID levels.
Well, as a consumer, I'm saying, yay, promotions, Mark. I'm going to be quite honest with you. But it does say something to kind of move the needle, right? To get consumers kind of off the thinking area into the actual, buying of something. So how aggressive are your promotions, and are you anticipating that in terms of maybe some weakness and the need for promotions that this continues into 2024?
Yeah, and in the earnings call today, what we refer to is we consider the promotion environment as having normalized, i.e. call it past tense, which also implies we expect it stabilized going forward. So in terms of the depth of the duration of promotion, this is not any different from pre-COVID. And frankly, it is something which we expected, but it happened and occurred maybe 1 or 2 quarters earlier than we originally anticipated. And that again comes fully back to the discretionary side of the demand, post-mortgage rate increases, post all these horrible world news messages, that tumbled pretty much, call it in Q2, and consumer confidence ultimately drove that lower discretionary demand, which in turn drove a higher promotional intensity in the environment.
What about the other part of your business, the part about workers, attracting and retaining talent, costs that you have in terms of buying the equipment necessary to build these machines? How are wages for Whirlpool workers right now? Are they up year over year?
Yeah, so first of all, to put it in a broader context, as you know, over the last 3 years, we were not only concerned about cost, we were also concerned about resilience and the strength of our supply chain. The latter part, we basically have, I would say, pretty much fully resolved. Our supply chain is intact. We don't have major availability issues, so that make a check mark behind it. On the cost side, over the last couple of years, we saw the biggest increase of cost on basically raw material and transport. Transport has come down quite a bit, and raw materials are starting to trend down, and that is a favorable trend which we observe, particularly second half of this year, and we also expect into next year. Well, wage side, and again, that is more driven by, of our U.S. factories, one is unionized, the other ones are non-unionized. We basically have every year wage adjustment, and we, in face of a labor shortage, particularly in 21 and 22, we did already fairly significant moves on that wage side. So I would say this year we're not confronted with a massive wage increase. We still, of course, do year-over-year increases, and that kind of helps us dealing with the labor shortage. And right now, I would say across the board, maybe with some fewer region exception, we're pretty well staffed, and the labor shortage is a lot less of an issue than it was, for example, 2 years ago.
Hey, Mark, so what do you make of when we get the retail sales numbers that come out and it shows a really strong consumer, and which kind of surprises everybody because we keep talking about student loan payments or car payments that are going to slow down the consumer? I see what you said about replacement versus discretionary, but does that retail sales data sometimes surprise you? When people say resilient consumer, does it kind of just say, well, resilient, but maybe not so much?
Yeah, I mean, Carol, I would say, I think you need to move from a headline into the details. And yeah, the consumer spending, and that's confirmed. The question is on what is the consumer spending? And we saw there's a lot of spending on services, restaurant costs have gone up, travel has gone up quite a bit. Our part of the business, consumer durable, and again, I'm talking now the discretionary side, not the replacement side. For most families, buying a washing machine or remodeling kitchen is a very significant part of their disposable income. You only do this expenditure if you have confidence in your economic future and the broader environment. And consumer confidence, and you can look at whatever index, that is the one which kind of, call it April, May, dropped off pretty sharply. So yes, I do see the overall consumer spending. I think with durable categories, it's a slightly different picture. They're just on the long-term big disposable items, or big ticket items, there's some reluctance on the discretionary side. Again, replacement side is very solid, but on the discretionary side is soft.
Do you guys talk a lot about a recession coming? It's been, coming for 2 years. And some would say, listen, we've already had, certain parts of the market have seen, or certain parts of our economy have seen it. But what's your best guess? As someone who runs a company, you've seen so many different, we've gone through a very tough market cycle, certainly coming off the pandemic that was bad, and then it was actually pretty good. People were doing things, especially on their homes. So do you think a recession is likely in the United States, your biggest market here, certainly by revenue?
Carol, first of all, I would start with a caveat. There's probably a lot more people more competent about that subject than I am. So it's the way I would look at it. Our company, in many ways, is a canary in the coal mine. We see certain trends earlier. What I mean with that, we saw the cost inflation in our business a lot earlier than most companies saw it. At the same time, we saw the beginning of the cost deflation a little bit earlier, and we probably also see the kind of a normalized consumer promotion environment a little bit earlier. So most of what the broad economy sees, we tend to see maybe call it 3 to 6 months earlier. With that in mind, it's kind of, I think, broader terms, the U.S. economy is more resilient than most people thought. So from that perspective, I personally do not see a scenario for a deep recession. Could there be something shallow? Yes. I think the key element will be going forward too is, when will the Fed signal a kind of a stabilization of a plateauing of the interest rates? That is a big element. And then, of course, what is a little bit more difficult to answer, when do all this horrible world news become a little bit more less, or are we getting numb against it? So that's the consumer confidence part of it. But again, from a person perspective, we don't expect a big boom, but we don't expect the scenario for deep recession. We're prepared to very small, modest growth in our industry, but we're also prepared to deal with a shallow recession.
Mark, on that subject of everything that's happening around the world, our focus certainly...
Not numb.
Not numb,
No,
yeah. And our focus certainly on the Middle East in addition to other parts of the world. But there's also the business side of this, which is oil prices. And I'm wondering how you're watching energy markets, how you're watching oil prices, and if we do see a spike in oil prices, what that does to your business.
Yeah, and Tim, let me be... Maybe a radio call is maybe not the perfect forum to comment on this horrific attacks and the subsequent human tragedy coming out of this one. So it's kind of difficult to move from that to the economic impact. Having said that, of course, there is the entire Middle East situation. If it would further escalate, has some risk on the oil prices. Again, there's a big if it further escalates in an uncontrolled manner. As you've seen the last 2 days, the oil price from initial spike, they came down a little bit. And right now in our internal forecasts, but again, there's people who probably know a lot more about this, we expect also stabilization, a sideways move of the oil. But it's a lot depends on, will there be stability in what is an extremely difficult Middle East environment?
No, absolutely. Mark, we so appreciate your time. You've always been so generous, and especially throughout the pandemic, coming off of it, trying to help make sense of that cycle. And we really appreciate your time and trying to understand what's going on, and really appreciate it. Mark Bitzer, he is Chairman, President, and CEO of Whirlpool, joining us on Zoom from Benton Harbor, Michigan. A great gauge on what's going on in the economy at a time when there is so much heavy news, so much uncertainty. Really appreciate. Lots more to come right here on Business Week.